All right. Good afternoon, everybody. Uneducated Economist here. So, going to give you a lumber report. This is getting to a critical stage here, and I have been trying to warn about this for quite some time. About here, get the mic there a little closer. About what it is that's happening within this industry, and there has been for quite some time a lot of mill curtailments, inventory depletion, shutdowns. It's been a very, very difficult time to operate within the lumber industry. And now, as much as I've tried to share this information, it is very difficult to see it because there's not a lot of people out there who can share this real-time information with you. There are a few websites that you can go to, and there are a few lumber newsletters like Madison's Lumber Reporter, and I'm not getting paid to say that. They're a friend of mine, and I really appreciate all the hard work that they do. But this is not an industry that you can just go to any website and then get a real-time understanding of what it is that's happening out there. Now, I've tried to share on this channel again, time and time again, about what it is that's happening with mill curtailments, inventory depletions, and essentially the critical state that the building supply is now in. Let me share this with you. I'm not going to share exactly where this letter comes from. I don't want to trigger any kind of copyrights. I don't know how all that's screwing with my algorithm here, but I want to give you as close to the understanding of this information. This is a major distributor of building supplies, mainly lumber, forestry products. You would recognize their name. It says here, mills are able to keep pushing prices up every week. Sometimes not by much, but the firmness remains. Weekly production manages to sell itself with tight supply. Therefore, no discounting needed, and order files are able to maintain a 3 to 4 week posture. So there is no concern about low prices or lowering prices in order to move inventory. It seems to be moving itself, right? How did he say it? The weekly production manages to sell itself with tight supply. Therefore, no discounting needed. Goes on to say, notwithstanding larger global dynamics and reignited tariff news. So this is pretty interesting to think about. Like the idea that there's tariff and all this other stuff, don't even consider that. We are now sitting in a situation where the inventory is so tight that the production, no matter how much they get out, well, I don't know about how much they get out, but even though they might put out a lot of production, the tight supply means that the firmness in the pricing means that upward trajectory is the only direction, not downward. Goes on to say here, expect the trend to continue into Labor Day. The only thing not moving is OSB. Now, this is pretty interesting. Now, I see this with myself. Like I sell building supplies for a living, this is what I do. And OSB is not a popular product. In fact, it is almost never sold. And now there is a demand for it in the sense that people do buy it, but not nearly as much as the plywood. And whether it's in overproduction, under demand, I don't know what it is that's going on within the broader industry out there. But I know my customers up here in the Pacific Northwest don't really like OSB that much, but I know it's definitely a much more popular product down in the southern part of the country. And it says here the only thing not moving up is OSB. We've been within $20 of historical bottom for what seems like months. We are all reporting steady to busy activity. North American OSB consumption is not really at a point to pushing prices up. See, there is really no demand coming in the OSB, not in any kind of significant fashion anyway, not in the North American market. And that's what these guys are suggesting. And what's funny about this is that they're not the only ones. I got another letter that I'm going to share with you here in just a second. Can't push price even with the capacity taken out in the spring. Okay. We are oversupplied in general. That's what they're saying about the OSB. That's literally quoted. We are oversupplied in general. Goes on, mills are bleeding at this level and have been for quite a while. Rumors that I'm not going to say these names. It's 2 mills. Again, these are major, like, OSB producers. Again, OSB is oriented strand board. It's basically the alternative to plywood. Stands for oriented strand board. And it's funny because a lot of people, like, look at it as and call it chip board, but they'll also call it, like, they'll also call it a very negative term too. Anyway, rumors that two very large mills, let's put it that way, who produce OSB, are waiting to see who blinks and starts curtailing. With wildfires all over the country and up north, we get our production. Gee whiz, I cannot read. All right, let's try this one more time. Okay, so you blank straight content. Okay, with wildfires all over the country and up north where we get our production from, possibly they are waiting for Mother Nature to push prices up for them in the form of forest closures, mill evacuations, fire activity, etc. So for all you, like, conspiracy theorists out there, it's pretty interesting that they mentioned this particular thing to drive up the prices, right? All this forest closure, mill evacuations, and fire activity, right? Who set the fires off? The hottest part of the fire season is just around the corner, so time may tell. So very interesting to hear some of the things that was being spoken inside of this letter. And again, these are like letters that are sent to us to give us a better understanding of what it is that's taking place within the broader industry. It's not just what's happening in my local area. This is like a broad view of what it is that they're trying to share. And so each region is going to look quite different from every other region that's out there. And that's where this next letter really starts to play out, because it starts to talk about the eastern, the western, the southern part of the United States, and how the production in each one of these is very different, and the demand for it as well. So again, now this is I'm not going to share who it is that sends it to me, because I'm just proprietary and whatever. I don't care. I just don't want to trigger algorithms or bad algorithms or whatever that's supposed to mean. Anyway, here we go. Talking about OSB. So again, we just heard about the negative understandings of OSB within the ideas of what was spoken in this first letter. The second letter, it almost speaks of the same thing. It says, even though mills have quietly been reducing capacity, supply still remains adequate for the current demand. So same thing, essentially what was being spoken by the other, major producer of building supplies. So that was pretty interesting to see. Like, they essentially both say the same thing, just one got more in depth about it. Okay, fir plywood. Okay, most mills are trying to hold firm, but with the lack of order files, they must look at each quote as a possible order, which they are starting to push for. So that's pretty interesting to think about, right? Like, the demand for plywood seems to be much higher than it is for OSB. And you can hear it within the statement. Most mills are trying to hold firm, right? But the lack of order files, they must each quote as possible each order, right? Quote as possible each order. They are starting to push for. So although they are not necessarily in the OSB market, the idea that they can take discounts is probably starting to show up a lot more. Now, to understand that if OSB production was to fall, the idea that those discounts, they'll evaporate almost immediately. It's on the edge as we speak, right? There's not a lot of demand for it, so they're willing to offer up discounts, but very small ones, right? Within the order files being out. But the moment that the OSB comes in lack of production and people are switching over to the plywood, you're going to see this like tippy spot move into the demand side of things, and you'll start seeing the prices going up. Goes on to say this: no signs of log costs going down price wise. Thus, we could see mills picking and choosing which products fit their mill productions best. And I think that's the understanding that we really have to take in, is that they are going to produce that which is selling. So if they're sitting on a tipping point going, I don't know, man, we're already having to offer up discounts in order to move this stuff around. OSB's not selling at all. They're in overproduction essentially, or overproduced. So maybe the only thing that we're going to produce is that which sells. And this is where the mills will then start focusing in on just those critical items. Again, like if you're on a tipping point, what's going to happen to that supply? It's going to fall into lack of production, right? And the demand is not going to be, or the demand will then overwhelm that and keep the supply high or keep the prices high. Sorry, guys, I keep walking. And okay. So again, let me read that one more time because it's kind of difficult to hear it. But if you think about what they just said, the mills for the plywood, the fir plywood, are sitting in a critical state where they're offering up discounts, but small ones, right? At the same time, they're finding log costs going down price wise. Thus, could see the mills picking and choosing the products that the mills best production meet their production best. Very critical. Like the items that you really want may not be the ones that they want to make. All right, Southern yellow pine plywood demand was slow this week despite Hood's announcement to shut their Wiggins, Mississippi mill. Now, this is something that we reported on a couple of weeks ago. And really, I haven't seen any kind of real like issues that come up from it. And I've never heard anybody actually mention this mill, not from any of the people that I talk with or anything. Like I've brought it up to a few people and nobody else heard about it outside of this letter. So I don't know. Like, I mean, it seems to be important because it's come up a couple of times. But as far as like spread that information across the entire country or whatever, like nobody else I heard talked about this particular mill shutdown. Anyway, moving on. Okay, Western SPF, the price of Western spruce pine fir, let's see, were driven higher this week due to the tight supply and slight increased demand. And now this is something that I've been trying to find evidence of coming from like the builder sentiment. I haven't exactly seen that yet, right? But the slight increase in demand, I've kind of felt that at the yard. Not necessarily like, significant, but to see that it's like popped up in this newsletter kind of tells me that maybe there's something starting to turn around a little bit, but nothing to like actually report on to say, hey man, we're now there. But it's pretty interesting to see that it happened to come up in the Western spruce pine fir section of this letter. And again, it says the price for spruce pine fir were driven higher this week due to tight supply and slightly increased demand. 2x4 number 2 SPF sold at 510 per thousand to 520 per thousand, up 10 to 12 per thousand, the first increase in 6 weeks. Demand remains stronger for 2x6 number 2 SPF, pushing prices up 18 to 20 per thousand, depending on the tally. 2x6 number 2 is now 60 per thousand premium to 2x4 number 2. So to understand like the big gap between pricing that starts to take place, like a 60 per thousand between 2x6 and 2x4 on the premium stock. And again, like, once you start seeing these big gaps start to happen between the pricing, it's really showing that inventory levels are tight. Like, there's more available of one than there is of another. Stud trims on ground price. Stud trims remained on firm ground with prices holding and getting small increases. Premium 8-foot trims were in more demand in both 2x4 and 2x6. Yeah, and I was experiencing that myself. Like premium grade lumber is like getting very difficult to find. It's like very difficult. All right, we're getting close here, guys. There's a few more to go here. Let's see here. Talking about futures, summer shutdowns for both Canadians and Europeans have imposed supply constraints, keeping cash suspended. And now we are left with a standoff. Who will tip the needle, buyers or mills? Oh, that's pretty interesting to think about. That's talking about the futures market. November futures had a run up this week as funds stepped in based on the news of potential additional tariffs and into the US from Canadian mills. Yeah, that's stuff like that whole mill, all the tariffs and stuff like that on Canadian lumber. People thought that that would just drive lumber prices really high. And I think I was the only one out there going, that is not going to make a huge difference. It might make a difference in the expectations, but I doubt it's going to make a difference in the overall pricing. Um, I mean, not any kind of dramatic difference. That really comes down to supply and demand and what it is that's being produced. And you can see, like, from what it is that I have shared here on this channel, mill production is like down. It's very low. Eastern spruce pine fir. Pricing for the 2x4, number 2, 8 through 16 Eastern loads have leveled off, while 2x6 number 2 random availability remains constrained. Right? 2x6 number 2's random availability constrained. Yeah, exactly what we have been reporting on for a while. Open market pricing for 6-inch stud trims, including 104 and 5/8 and 116 and 5/8, have increased. Some Eastern producers are entering planned summer shutdowns. Already in tight supply, and then boom, more shutdowns taking place. Oh, Southern Pine, all zones. We are seeing pricing pressure from mills trying to produce to meet demand by missing the mark. The lack of big logs in the west and central supports the levels we are seeing. We are seeing pricing pressure from mills trying to produce to meet demand but missing the mark. The lack of big logs in the west and central supports, or I'm sorry, lack of big logs in the west and central supports the levels we are seeing. The overproduction of 2x4 and 2x6 in the central region in the short term, we're seeing dealers take advantage of the deals now. Huh. Interesting. That southern yellow pine market, that's a whole different market than the one that we operate in. Like, I operate in the Doug fir, essentially the green Doug fir market is what mostly that you're going to expect to see up here in the Northwest, and with kiln dried as far as like the retail product. All right. Western species dry dimension. Continuing lack of overall availability, a pickup in demand in the first part of the week, and transportation delays continue to keep this market on an incline. Again, those looking to see where it is that lumber prices are going, we have to understand that there is a lack of there's like availability in the eastern part is pulling from the western region. Okay. Now, what we find here taking place in the western species of dry dimension, continuing lack of overall availability, a pickup in demand in the first part of the week, and transportation delays continue to keep this market on the incline. Right? Just any kind of spark in demand. The most difficult items to source are, again, premium items. I'm experiencing that myself. All widths and lengths, precision and cut, precision cuts, right? Studs and wides, encompassing number 2 and better select structural. There has been a substantial increase in wides pricing again this week, moving up 20 to 25 on hem fir and white fir. Huh. I've never seen that one described like that. W fir. Huh. All right. While 2x10 Doug fir large was 20 to 25, up 20 to 25. Increasingly enough, 2x12 Doug fir large did not move much. We have seen a few discounted offers this week on 2x4 dimensional and 2x4 104 and 5/8 precision studs. Interesting. So it sounds to me like, again, the lack of overall availability, a pickup in demand in the first part of the week, and the transportation delays continue to keep this market on the incline. And I'm somewhat witnessing that myself. Like, I find the availability not necessarily, like, gone, but at times very limited, and that's kinda concerning when you really think about what it is that's happening out there within the idea that you wanna bring new housing, new construction to the market. Well, if you're gonna have a pickup in this demand for new construction, you gotta have the available lumber, and right here, it is showing that the available lumber is essentially not there, and it's probably not going to be there. I mean, I'm not trying to just be fear-mongering with the whole idea of the wildfires. That was stated right here within this lumber newsletter that had come to me that says, right? Waiting to see who blinks first starts curtailing. With wildfires all over the country and up north, we're up north where we get our production from. Possibly they are waiting for Mother Nature to push prices up from in the form of forest closures, mill evacuations, fire activity, etc. The hottest part of the fire season is just around the corner, so time may tell. And so it's very interesting to see what it is that we really have taken place within this lumber industry. Nobody's going to like everybody's going to assume and make their stuff up. There's nobody who has any information on this. So whatever it is they come up with their ideas either from their own local view or just fabricated from their own imagination, because there's literally nobody who can see what it is that's going on throughout the entire industry. Even I have a difficult time trying to witness what it is that I am seeing throughout the entire nation. And I am attempting to call people, actively pursue the information from eyes on the ground perspective, from people that I know within the industry in order to get a real time understanding of what it is that's happening within this industry. And anybody who seems to think that they can look out there on the internet and find that sort of information, I don't know, maybe it's out there. I don't think so, though. Right? I just don't think that's available information out there. You really have to know other mill operations. You have to know distribution hubs. You have to know other retailers out there. You have to talk to the vendors and ask them, how is it looking in the other parts of the industries? Are you finding layoffs taking place? Are you finding like people failing to pay their bills? Like, these are questions that you can ask, get an understanding of what it is that's happening. It may not be 100% accurate or documented, but it is definitely something that you could get a better feel and understanding of so that you can then position yourself accordingly. Those who miss this, like, I don't know. I mean, I don't know what to tell them. It was like, it's not like I haven't warned people that we are now sitting in a critical state within the lumber industry for quite some time. These lumber newsletters share that exact same information that I have been trying to share on this channel for months. I mean, lumber is a very slow, cumbersome moving industry, and to think that this stuff happens overnight is wrong, right? This thing takes years to work through, and it's getting very difficult for a lot of people out there in a lot of ways to find the products that they are looking for in order to complete what it is that they got for their projects. And this is like, and this is an example of it that, within the idea of plywood in some areas of overproduction and in many areas, a lack of production. It says here, mills are bleeding at these levels and have been for quite a while, talking about the OSB market. Mills are bleeding at these levels, and have been for quite a while. Even with capacity taken out in the spring, we are oversupplied in general. That's talking specifically about the OSB market. Oh, lucky for the housing market, it happens slowly. All right. All of us in the Southeast use OSB for sheer values on the coastal regions. Pocket watching at work? Oh, right on. Good evening, Kevin. Thank you so much for being here. We got 40 people who have joined in on this live stream. I don't know how many people are looking for information about the lumber industry to really get a better understanding of what it is that's going to be happening within not only the broader economy, but definitely what's going to be happening within housing. Those who look for cheaper housing, look for the idea that we are going to find like new construction coming to like the supply of homes out there at some point in the future. When you think of this, if you have a sudden increase in demand for lumber for new construction, and you already have a critical situation taking place within the supply, how is it that this inelastic demand is going to react to a very limited production? Like, you can't just produce as much as you want. Like, you could if there wasn't any demand, you can produce as much as you want. But when you have a limited production, you can only produce so much. The mills will only run at so much capacity. And then we have a bottleneck inside of the ideas of the kilns. Like, you can, you only have so much space and so much time in which that these kilns need to operate. And so if the demand exceeds the production, then the inelastic demand will send the prices through the roof. And this is, and again, like, as people try to question what it is that had happened back during the great, during the COVID and the great run up of lumber prices, I tried to share this information so many times on this channel, and people pushed back against it, said, man, you're just, they're doing it out of manipulation purposes and all kinds of stuff. And I mean, okay, yeah. I mean, if you think that it's manipulating the industry because they don't want to produce and not profit, like, would you not? I don't understand. Like, producing and not profit. Like, who would do that? It just blows me away that people would expect that to happen. These greedy mills, greedy, whatever industries, and I'm thinking they're shutting down operation because they don't profit. Why would they build a mill to not profit? Why would they run the logs to not profit? Why would they supply a product to not profit? Like, that doesn't make any sense. Right? And so when we think about what it is that needs to happen within this industry, yeah, when they cut back on supply, when they are doing it, they are manipulating the situation in order to drive the prices higher so that they can actually profit from it. Right? Like, that's reasonable to expect and think. So if people don't think that's reasonable, then I mean, I guess it's the meaning that you have chosen to give it, but that's a reasonable thing to expect. And this is the unfortunate consequence that we now sit in, is that the demand does not give them the ability to now produce at this level. So they curtail development. If you have any kind of increase in demand, which could happen, especially if you have any kind of government subsidized industries, such as that of like new constructed homes or apartments or whatever, then you can find that the available supply out there just doesn't meet the adequately meet the demand, and then you have the issues. All right. Blue ribbon for showmanship, that's what Freddie got. All right, Freddie's at fair right now showing his goat. Nice. We're gonna go, and they do the auction tomorrow, so hey, dishes, see you soon. Yeah, like day after tomorrow. Uh, so any questions about lumber? Are we good? I just wanted to share this information. I think it's very critical. I think it's important stuff. And I think it's very telling of the situation we now face within not only just here in the lumber industry in the Pacific Northwest, but all across the entire nation, and then what it means for the broader economy. Following lumber is probably one of the most telling industries that you can look at to get an understanding of what's happening within the economy. Like, watching lumber is, to me, like the key indicator. It's like better. It's more telling than any other industry out there. And the reason behind it is because when you look at lumber, you're looking at something that is a domestically supplied product, like almost 100%. Now, you can include Canada, but even in that sense, it's still very close to being a very domestically supplied product. Every bit of it. The energies that go into it, domestically supplied. The operation, from the equipment and everything that goes into it, domestically supplied for the most part, right? The labor, domestically supplied. The distribution network, 100% domestic, right? Oh, that was something else I wanted to share with you guys before I forget. There was a spot in here that I wanted to share about. Here it is. Yeah, listen to this. Rail car shipments have also seen delays as some suppliers have overextended themselves, thus creating havoc in fulfilling orders in a timely manner. We expect the market will continue its flat to upward trajectory in the near future. That's pretty interesting to think about. I'm not sure exactly where it is that they are going with that, but I thought that that was very telling. Railcar shipments have also seen delays as some suppliers have overextended themselves, thus creating havoc in fulfilling orders in a timely manner. We expect the market will continue its flat to upward trajectory in the near future. Again, like lumber is not going to get any cheaper than this. In fact, it's probably going to be moving up from here. How far? Anybody's guess. If there's any moment in the idea, like you think about it, there's hardly any demand right now, and it's already starting to pick up, and we're finding the issues within it. So, what could we expect for the future? Good job, Freddie. Congratulations. Yeah, absolutely. Freddie did so good. He also took champion for a photograph that he had taken. Like, yeah, like champion for this picture of T-Mobile Park when we had gone up there to go watch the Sox play. And yeah, he had gone around to the outfield and was looking back at home plate and snapped a picture. It was really cool. In fact, hold on, let me see. I might show it. Let me see if I can show it to you guys. I can show you a picture of the picture. I don't have the actual picture. All right. Hey, thank you for the super chat. I'll take a look at that here in a second. Yeah, here we go. So sure enough, look, and with the here, I'll even get the flag in there. So that was Freddie's picture that he took. You see it? And that's his champion, Clatsop County Fair. And then what else? So proud of the boy. And then he took a reserve champion for this picture here of the starfish over at the ocean. Pretty cool kid. Is it possible for home price grow by 2% year over year, but inflation rate 4%? That creates a 2% loss in housing value. I mean, yeah, I guess that's possible. I mean, if every single thing out there grew at 4%, but housing grew at 2%, that would be essentially a loss on the housing value of 2%. But that's a very like hypothetical situation that I don't think would necessarily exist in in the reality. Maybe for a moment in time, that might be like, a reasonable, spot to expect. But I don't think that's any kind of sustainable position that you could expect to actually create that kind of like, outcome. But thank you so much for that super chat. That was very cool of you. Where are we at? 35 minutes into the live stream. All the information was in the first 20 minutes anyway. So with this information of the increased prices in lumber to be expected, we shall expect more people to be priced out of the market. I would only assume that's going to be the case almost regardless, deplorable. Like, buying into a housing market right now is probably only going to happen to those who are strategic and those who have the money, like essentially the people who are at the top household incomes. The average wage earner is going to have a very difficult time operating inside of this. It's like going to be almost impossible for them to produce enough within their hourly wages in order to acquire enough of a down payment or to produce enough to meet the interest payments needed in order to acquire the asset. Like that's going to be out of the realms of possibilities before too long. Like there'll be some places, some people can do it with some industries, but that's not going to be like the general speaking of the population. Somebody got mad at me the other day because I was talking about like how people were going to lose their $100,000 zombie corporation job and go and start flipping burgers. And they got mad at me saying like those people are not going to possibly get hired flipping burgers. They're overqualified. And they went on and on and on about it. And I'm like, I'm speaking in a general sense, not for a particular person, right? Yeah, for a particular person, that might be the fact. But what did you see exactly happen? People lost their zombie corporate jobs, and then we saw the service industry get filled up. Like that might have not have been the exact person who lost their zombie jobs. I'm talking generally speaking within the economy. Zombie corporations had lots of layoffs and bankruptcies and people losing their tech jobs, only to find when you look at the service industry that those positions got filled. Now, whether or not that was the same person, I couldn't tell you. That's like each individual. But generally speaking, within the economy, that's what occurred. Uh, and to take offense to that is like, why are you giving it that sort of meaning? Like, I mean, there's nothing to be offended by here. Like, if you get offended by something I say, that's literally like, because you have given a meaning to be offended, like where's that importance come from? All right. Nice picture. It is, isn't it? Both of them are awesome pictures. All right. I'm working with VA buyers who are still buying 100% down VA loans. Houses that are bought outright, that may be the case, but houses that have loaned you 90% of the cost here, ratio of return is much greater than 2%. Matt, can you please take the dog out again? Thank you. All right. So if you're saying it is good economic indicator, do you expect it will be going up in price here soon and staying that way? Or is it going to be like during COVID-19 when it goes up and then... What are you talking about, lumber? I'm not saying lumber's going up. I'm saying it's not going down. What does that mean? Right? What I'm saying is that there's not a lot of supply out there. That's pretty evident. There's talk of more mill curtailment into the future, although nobody is quite saying it yet. The oversupply of OSB is pretty evident. So that's going to probably, start shutting down some operations. Wildfires just getting started into the season. That's going to shut down operations. What do you think could happen? Like, do you think that the prices could go down from here? The fact that we have very little demand or lack of demand and prices are moving up right now. I mean, does it seem like prices could go down? I mean, I guess they could. I mean, anything could happen, but it doesn't seem like the industry right now is in a position in which that those prices would go down. Maybe for OSB because they're a bit oversupplied, but that's only a matter of time, especially if these mills go into curtailment, which seems like they might do that, very thing. Okay. My only question is, why would you need a loan if you're paying on 100%? I would much rather take out a loan to buy an asset that pays for itself than to use my own money. Like, why would you want to use your own money? Use somebody else's money to buy that asset. It doesn't make sense to use your own money. I'd borrow money to buy an asset if the deal was right and it could pay for itself. Absolutely. What is going on with my dog? All right, Max dealing with it. All right. Excuse me. Okay. Deplorable. That's what our plan was. Buy cash, renovate, rent, refi, and get cash with a loan. Why would you use your own money? I don't understand why that would be the case. Like, I mean, I understand like if you want to be independent away from like having a third party risk, but why would you use your like "Here, I'm gonna borrow money, I'm gonna buy that asset, and that dude's gonna pay for it, and none of my money is involved? Like, why wouldn't you want to do that? Like, I understand the risk involved with it, but I mean, honestly, like if you thought about that for just a minute, it was like I'm gonna get an asset that somebody else is gonna pay for, and I'm gonna use somebody else's money to do it. Sounds like a pretty good deal. uh, you guys are talking here. So where else can I go? You guys, it looks like all nighter and deplorable are talking here. Build an underground hay bale constructed walk-in freezer, then force the people you're feeding to labor for you making another one. Huh? No, nope. That's the transition into leverage from all cash positions. Still got the asset. Starting off with cash, buying it, and then leveraging it out. Yeah, I can hear that. You pick it up for a cheap price, turn it into something that's really valuable, and then borrow the money against it. That's totally cool. You know, there's so many ways to make money out there. It's insane. Like, it's insane to think about what it is that people could do in order to acquire money. And if you use other people's money to do it, or use a little bit of money to acquire money, it's like the people who are sensible with that can really figure it out. It's the people who are like, man, I have to trade all my time. My time is what I need to trade for money. Those are the people who end up like really suffering the consequences. Stud move I learned from Millennial Mike. Millennial Mike is a smart dude. Like when it comes to understanding particular industries, when it comes to understanding particular like ways of doing things, you really have to follow the people who are paying attention to what it is that is going on within that particular industry. Like it's one thing to say, hey man, this is where house prices are going, this is where interest rates are going, this is what, rent's going for. But it's another thing to say, hey man, I see a strategy in which that I know a location in which that we can produce an income within these properties that is not like anywhere else. And to be able to understand that, see that, move in that direction, that's pretty cool, right? Not everybody can do that. Having been in the game long enough to actually have that skill, it's just as valuable as having the skill of trading stocks. Literally. Like those who know how to trade stocks and learn how to flip them and do all the, day trading, whatever. That skill and understanding of how to read the charts and how to predict it and how to, do all those things that come with stock trading, that's just as valuable of a skill as learning how to renovate, flip properties and make them profitable in the ways that that is done. And everybody's going to do it differently. To be able to invest in cash and then take that and leverage it out into some cash that's much higher than the property would have ever been valued at before. That's pretty cool opportunity to then use that property to then get into other properties, and to understand how it is to do that is very unique in the sense that not everybody does it the same way. So to pick that out and figure that out, that's cool. Hey, Justin, I like zero personal labor ways of earning income. Here we go. Like, one of the things that I've been looking at is doing option trades. And like, it seems like like you kind of have to have a little bit of money to do it because you have to do it with 100 shares. But the idea that you can sell options, yeah, covered calls and cash puts, and then just simply just like pick up the money. Like, do it with stocks that you would really want to own. Like, you look at a stock, you think about it, it was just like, okay, so this is a stock that I would really want to own anyway. And now, granted, not everybody's going to have the ability to dump, like, to buy 100 shares of a particular stock that they really want. Like, I mean, it was like, some shares selling for, $100 a share or something, and you came up with $10,000 in order to make this happen. But if you did find companies out there that was within your price range for what it is that you would look for to buy as far as a stock that you would want to own, like doing it through an options trade is really kind of the way to go about it, right? So not only can you, like, position yourself to try and get the best price for it, but then you can also get paid to do that. And now to understand how that operates and how that works is pretty cool, to figure that part out. And to know, like, even if it doesn't reach the price, you still got paid for the contract of it. And if it just expired worthless, no big deal, just do it again and just sit around picking up money like that. And I know for a lot of people, it would be like, oh, dude, it's just not that easy. And you're right, it's not that easy. It's not a get rich quick scheme, but it's understanding how to do it. And just like everything else out there, learning how to be a trader or an options trader or a capitalist is just a unique skill as it is to be a landlord and property owner in the way that you're going to do it. Because I guarantee you, Zuber's doing it differently than Millennial Mike is, and in the way that All Nighter does it is differently than what the average everyday person's going to do too. I mean, not saying that they're going to do it differently than All Nighter is. It's just All Nighter is doing it differently than what most people are doing, right? To reach out there, make the connections, get involved, make himself useful, and then get, part of that ownership in that property. That's pretty damn cool, right? People say you can't do it nowadays, and I'm like, I beg to differ. I really do. Yeah, there's plenty of people. I mean, many people. It doesn't look like they're kicking ass, but they're kicking ass right now, and it's not easy to do, but it is possible. You know, it is ridiculous for the rest of us homeowners to pay higher rates because of all the people living in the wildfire hazard rural areas. Well, it's not unfair, but that's just the way it is. Of course, it's not fair. Nothing's fair. Nothing in life is fair. It's all ridiculously unfair, the entire thing. And like, yeah, I totally agree. It's not fair. It's not fair that I'm, I don't know, everything. It's just nothing's fair. Unfortunately, owning a home, not as good as a deal as it used to be, unfortunately. Kirk, I disagree. Owning this home has been the best deal that I didn't think it was going to be. I was very concerned about it at the time, but over the reality of the situation is it's absolutely been the best decision I've ever made in my life. Right? As much as I didn't want it to be, like I was pushing against it. The universe was like, nope, dude, you're buying a house regardless of what you want to do with your whole idea that you want to be a renter, an asset holder, and not hold any liabilities and all that other stuff that I had tried to go towards. The universe had other plans for me and says, no, you're going to buy this house and it's going to be a really good deal for you. And as much as I didn't believe it, that's exactly what ended up being one of the best deals that I could ever have possibly gotten myself into. And I could never, ever second guess that again. I was just like, man, that was so good. You know, much beyond my belief. But You have a stable income and a great area. I live in one of the most expensive areas in the entire country to live in. It's the 10th most expensive place in the entire country for populations 10 to 50,000. You're right. It's a great area. It's very popular. It's very beautiful. It's clean. It's friendly, and it's expensive as hell. And you can tell by the cars I drive that it's hard to live here, you know, and the amount of time and effort and energy I put into doing all this stuff. All right. Homes are always good to own. All right. My paid off house, property tax, and homeowners insurance comes out to be less than renting a 1-bedroom apartment. Homes are usually good to own. Nothing is always. People made banks by owning a ride in a carnival. Made bank by owning a ride in a carnival. Yeah. And when people are telling me, like, this is what's crazy about it is at the same time, people were telling me, dude, you're going to be so underwater on your house. It's going to be so upside down. You're going to be so crashing. You're going to be crying your eyes out. The exact opposite took place. And as people tell me, oh, it's only a matter of time. You're lying. You're whatever. And I'm like, I'm not lying. You know, the area is just absolutely blowing up. When I think about all these people who were naysayers out there, I never heard one single person at that time when they were telling me that I was going to crash and burn about how it is that I was getting a negative real interest rate on my loan. Not a single one of them. In fact, I didn't hear it at all. Nobody out there brought that up. Nobody brought any attention to the fact that inflation was running so high at the time that the interest rates were that low that a negative real interest rate was literally being offered into the mortgage loans. People didn't see it, didn't recognize it. They saw 3% mortgages, and they thought, wow, that's really low. That's going to create a housing bubble. But at the same time, there was an inflationary pressure that was running 5, 6, 7%. That was pushing real interest rates on those mortgages into negative territory. No wonder why the housing market exploded. No wonder. People still I look back and try to find people who will describe why the housing market exploded to the high levels it did. They will blame it on the low interest rates, the artificially low interest rates, the money printer go burr, the mortgage-backed security purchases, but they will not explain it that there was negative real interest rates being offered into the mortgage market at the time. I didn't quite realize it at the time. I knew there was a lot of inflation. I knew I was getting a low mortgage, but I wasn't quite thinking about it being a negative real rate. It was till afterwards that I'm looking back on, holy crap, that's what happened. Right? Started studying more up on it and started understanding more about the neo-Fisherism. Now that I understand that a little bit more, I start to realize, man, what's going on within this economy is nothing, absolutely nothing like anybody had ever described or understood. And knowing, I'm not trying to act or be all like, hey, man, I'm super genius or whatever at this. All I guess I'm getting at is that when I have a story that is so unique, so different, so compelling, and yet everybody else out there seems to be regurgitating the same information, who do you think is it that's really on it? Right? All the people who are describing the same thing, or the one person who's saying, hey, I've just looked at all these Fed documents and you can look at them too. I don't have any other information that come from anywhere else except for the Federal Reserve and the voting members of the FOMC. So there's nothing else to essentially alter or change the perspective of what it is that I have developed for a theory, because everything that I have put into my theory came directly from the FOMC itself. So all these other people out there who are describing what it is that they know about the FOMC, I'm describing what I've learned directly from them, and I never learned it from anybody else. There's no, everything that I know came from the FOMC. Right? Literally everything. And so as people are like, man, how did you figure this stuff out? It was just like, I don't know. I guess my mind wasn't, corrupted by other people's, institutionalized belief systems that were created from, all the universities and textbooks that are out there. Investing 35K into 6% dividend assets is equivalent to giving yourself a $1 an hour raise for the full-time wage earner. Interesting. Justin, you should look into option trades. I think you would really be into it. Study up on something called the wheel strategy if you haven't done that before, and maybe we'll talk about it tomorrow at the webinar. Speaking of which, I don't know how I'm going to do the webinar. I don't know if that's actually going to happen because I got to go to the fair. But maybe we can talk about the wheel strategy. Yeah, check it out. Check out the wheel strategy and option trades. And I think you would probably get a kick out of that. I think that's right down your alley. And if you get good at it, then maybe you can show me how to do it. All right. Right on. All Nighter has posted a link to the one rental at a time, the ORAT, right? The community. Definitely one that you want to join if you are even close to the idea of wanting to be in property ownership, especially that of rental properties. There's really no other community out there that is going to be as beneficial as that of the ORAT community. Just straight up. Like, you just can't beat them. All right. 30-year fixed mortgage. And what did you get, Simon? A 3.50. My God, people would kill for that. I got 3 1/8. 3 1/8% interest, 3.125. And you're right. Absolutely, people would kill for an interest rate like that. It is incredible. Like, it's a lot of money that you spend on a house, especially with all the interest payments that you make by the end of it, right? Because it's just like an insane amount. When you have a 3 1/8% interest rate on your mortgage, it is incredible the amount of principal that you make, principal payments that you make. Every single month, it's like 800. I forget exactly what the principal is. It's a lot. It's like $800-900. And now you have to think that's going into the equity of the house itself. Like, you got the interest payment that you're making, but every time you make that $800-900, the equity is like, you can go and take that out again, right? That's like money in the bank. And so when I think about that, it was just like every one of these payments that I am making, although I got this huge interest payment that's made with the 3 1/8, you got to pay it first and whatever. The actual amount of principal that I'm putting into the house is putting a huge amount of savings into the house itself, right? Now, granted, the house value could fall, which would wipe that out, but it's not, right? The house is worth a hell of a lot more than what I had paid for it. And every single month, I am having that much more equity built up into it from those payments, especially with the low interest rate on it. It was one of the greatest deals ever. Like, everybody's like, it was not everybody. The Crash Bros out there were running like loud. They were so loud. You should go back and look. Like 5 years ago, look at some of the videos that I was doing and look through some of the comments. It was horrible. I mean, like, they were hoping and wishing and dreaming that I would crash and burn. It was one of the saddest things you could ever read about. I was like, I literally had to comment to people. I was just like, dude, do you really want to see me fail? Is that what you're hoping for? So that you could be so right? Didn't make, decided not to pull the trigger, decided not to get in a house, saw me do it, and then said that I was going to crash and burn. And you were so hoping for that to happen that when it didn't happen, they left the channel. Literally, like, they're gone. Never see them again. USA can't win this war, unfortunately. What war? I've heard horror stories about real estate. Oh, bro. Yeah. I've heard horror stories about rental properties. Like, the ORAC community talks all the wins, all the awesomeness. Like, not always. They talk about horror stories too. I've heard the horror stories. I work at a lumber yard, right? I work in one of the oldest communities on the West. Like, that story is 200 years old. Yeah, it's way old. And when you think about what it is that's happening within the community here, it's definitely turning into a rental kind of place and luxury kind of standings. People who are wage earners generally on a high value property do not take care of it in the way that those people would hope for. And it is evident when they come in to talk about what it is that they had experienced. And so these properties end up being, rented out for a very high price. And then everybody wonders why it is that wage earners can't rent here. You know, it's just like, I look at it, I'm like, I know why. I know why. It's because these people put all this money into a house that those people trashed. And so if they rent it out for a high price, then generally it's going to end up going to somebody who is going to be a little bit more responsible because they can afford to actually rent the place. Yeah. um, because of immigration and money printing, I don't know. I didn't have any issues with like money. Like the housing market went up around my place. I don't have an immigration issue. Like, I mean, don't get me wrong. I'm sure there's immigrants around here. I mean, I hear about ICE running around out in other side of the county and stuff like that. But I don't have an immigration issue. I don't see it, but the house prices go up. So, like, we can blame it on immigration if we want, but that's like no excuse for my area. Yeah, can't use that excuse. Oh, deplorable. You have a goldfish brain. Oh, deplorable just likes to be argumentative. Like, deplorable is actually pretty good at playing the devil's advocate. And I've learned that when he is really on a roll, that I just kind of have to back away from reading his comments because, he does trigger the questions within it. And I don't think he honestly believes a lot of what it is that he is pushing out there as much as it is as he likes to trigger the argument. Yeah, he's good at it. Foreigners pay to keep Social Security sovereignty. Huh. Um, where are we going here? Deplorable's the only one commenting. He ends up owning the chat. Investors' eyes. No, he's good at triggering. I wouldn't push him into not knowing. He just knows how to like, twist the he knows how to poke the owie. If these weren't net positive, we wouldn't have the most. Yeah. Okay. I'm actually kind of done reading his comments. I would love to get back into talking about the housing industry, talking about how it is that the interest rates and the setting of the Fed funds rate in a position that is somewhat close to neutral will find its way into an accommodating position, considering the rise of inflation and inflation expectations, which will then essentially lock that Federal Reserve into that accommodating position, at least for 6 months, as the lag period would take place. So even if the Federal Reserve was to adjust rates, you still got 6 months of essentially stagnant Fed funds rate. And if the inflation expectation rises, it will ease the economic conditions. Very few people will describe that, but that's the reality of the situation. Yeah. And that's what I believe is going to be taking place. Nobody's going to describe that though. He has a belief he just doesn't check out Google or AI. Time to stop pissing in my fishbowl. Okay, guys. Well, this was fun up until like we kind of fell off topic here. It would be nice if we stayed on topic. The YouTube algorithm would love it a lot better. Certainly keep the spreading of this around. As most people are looking for a way out or the way to secure their future, it's going to become very difficult to understand how it is to position yourself, considering that the mainstream media, which is essentially the only place that anybody can ever really get any kind of real information, is going to deliver essentially what is the most entertaining and what it is that's going to grasp the people's attention the most. To try and understand and learn about R star, the neutral interest rate, the lower bound of zero, the Fed's accommodation position with the neutral interest rate, Fisherism and all that neo Fisherism and all the ideas behind that, it becomes so overwhelming and so burdensome that people would rather just be told, hey man, is the economy going to ease or tighten on the Federal Reserve lowering or raising interest rates? And I'm thinking, man, that doesn't, I don't know, doesn't work like that. I know you want it to, but if you want it to work like that, good luck. Okay? Like, it doesn't work like that. We wouldn't be putting toddlers in prison under Harris. That would be great. You don't know that. Okay? You don't know that. Hypothetical situations I'm not really into, guys. Like, I'm not gonna we can get into the political environment and talk hypotheticals all day long and have very reasonable, understandable, or very well articulated arguments that will really mean nothing. Absolutely nothing. And I'm not wasting my time with them. Like, I have better things to think about, understand, and try to position myself with than to try and think, well, what is it that Harris would have done? Yeah, like, I can really care less. That's not a real thing. What's really happening is what's happening right here, right now, with our understanding of the situation that we now face. And to look at it any other way is really a distraction, which is probably more in line with what most people are doing. There are too many people in this chat who don't understand the fundamentals of the information Simon has provided over the years. That is why the live chat is meh. Yeah, I agree. Like, the real information is done at the webinar. You go to the webinar and we talk real stuff, like what you can actually really do, because people are actually doing real things and they're talking about the real things that they are doing. And up here, they're just talking about what Harris would have done and stuff. It was just like, is that real? Is that like something that's useful and helpful? Is that the way that you have internalized the credible threat theory and then try to figure out how it is that you can use that to better position yourself? Is to think, man, what is it that another politician might have done? Does that help? Thank you, Investor Eyes One. I really appreciate you being here, man. I would bet we probably wouldn't. You are right. I was to say we wouldn't be putting other. Okay. Housing market is always about timing. A great way to set up our kids and family is by example. Absolutely, it is. Absolutely. If they recognize and see what it is that you're doing, like, they're gonna somewhat at least understand what it is that's going on within their life. Like, I don't push Freddie into anything. Freddie does he's awesome all on his own, right? And whatever he wants to do, I'm there to help. And like, there's some things that he doesn't want to do that kind of almost made, like, I don't want to say it, but it kind of almost made me sad. Like, it was just like, you don't want to do that anymore. Like, play ball. It's just like, not really. It's like, okay, well, I mean, you're doing awesome at so many things. How can I possibly push you into that? But if you were to ask Freddie, what's the difference between good debt and bad debt? He knows. He learned that from an early age. So it's subconscious in him now. Like, he cannot possibly make a decision going into the future where he will not think about that. Like, if he makes the debt payment, he's going to understand why it's a good debt or a bad debt that he's making. And he learned that from an early age. I don't have to teach him anything else. He knows that part, right? I mean, there's all kinds of stuff I had to teach him, But I don't have to teach him about good debt versus bad debt. He understands that from an earliest age. And as he grows up, he's going to apply that understanding to everything that he sees out there. He's going to watch his buddies do it. He's going to watch his business partners or whatever that happens in life. He's going to watch how it is that debt is used and who is it that used it right. Stop trying to time the markets. When you have the money, then it's the time. If you hold and wait, you don't know what life will throw at you. Simon's kids have been programmed differently from the norm, and it'll be cool to see how that serves them. Well, I mean, I don't know. Like, I don't know what it's going to be. Like, nobody knows if they're doing it right. Nobody knows if they're doing it right. Who knows if it's doing it right or wrong? But, time will tell on that. And I know that if I could give an understanding that there's no scarcity, that there's only abundance, and the difference between good and bad debt, and if I could program that into them well enough that they could use that, then they can figure it out from that point on. Like everything that they saw me do, everything they heard, they're going to subconsciously know what's going on. Whether they know it outright or not, they're going to figure it out. They're going to remember what it is that they had experienced, especially Mac. Mac got to experience a lot more than Freddie had. So, to me, like I'm not like their lessons are being learned. I don't have to teach them lessons. I don't have to show them anything. How far are we into this? An hour and 15 minutes. You guys want to keep going? 37 people watching with 46 likes. Nobody really liked this video. Huh, that's weird. I think like the lumber industry, once it takes off, people are going to be wondering what's going on. They're going to look back on it. They're going to be like, holy dude, you're so right about this. And it'll be like, yeah, too bad you didn't position yourself accordingly for it, right? And it was, with the idea of how it is that people are planning their projects and, their future, investments to look at what it is that's taking place within the lumber industry, whether you plan on buying a house or building a house or anything else, to see what's going on within it will be very telling to what it is that's going on with economic activity within the broader economy. I think the lumber industry is more telling than anything. I read Because of You, the Cantillon book, and enjoyed it 6 months ago. Passed it on to another. Life is an amazing process. Brad, thank you, man. Like, it's not even my book. That was Cantillon's book from back in the day, but the understanding that I'm sure that you have gotten, like, you can see the realities of the situation we now face through the lens of that book, right? Especially those 3 chapters, right? Chapter 6, 7, and 8, increase and decrease of money to the state. Like, they are so telling of what it is that we now face. And to understand, some of the things that he was sharing within that book. And it's not just those 3 chapters. There's so much more. Talking about the population, talking about the human behavior, talking about how it is that the people who have first access to the money and the way they spend it, like everything is written in that book. Yeah. And although we have different circumstances we now face today, especially considering, the idea of technology with cell phones and airplanes and, things that Cantillon can never have imagined, it doesn't mean those economic forces aren't playing out. All right. As far as politicians go, I think Cantillon rating on the options would be cool. The politician will insult enemies more effectively. This guy will accelerate economic downfall better, etc. Yeah. Politicians are useful idiots. I mean, at least it gives people something to blame it on, right? I mean, it was just like all the inequality that exists that separates the rich from the poor. All the rich people going, oh, it's the politician's fault. Go ahead and blame them and not us. We didn't buy into a luxurious experience. You're right. That wasn't us who did that. That was the politicians who did that. So, like, once you understand what it is that created the inequality and you blame it on politicians, like, do the politicians put a gun to people's heads and say, buy into luxurious experiences? No? Okay. Well, then it's not a politician's fault. It is the purchasing of luxurious experiences, whether it's items or things or services or whatever, it was luxuries that did it. That's what separates the rich from the poor. My boy is putting down flooring in his room today. He is doing such a good job. I am so proud of him. Right on. Very good. Mac went around and painted all the walls on the interior of the house. So, like not all of them, but he's done quite a few of them now. And he's done a pretty good job, considering he's never done it before. I mean, there's some spots, but dang, dude, for a first timer, I mean, it was just like, get at it, man. This is the place that you want to do a first time job. What's this little arrow down here? Engage with the audience, I see. Alrighty, guys. Are we done? Hour and 15 minutes into this. 40 people joined. 51 likes. I love it when we have more likes than people who are watching. I mean, I think the information that we share on this channel is very important, and I think it's very useful. And I also think it's unique. Like, nobody else is going to share this perspective. How else is it that anybody else is going to be looking at an economy that says, man, I think things are about ready to get unrestricted. They're essentially neutral now. Right? And if you think about what it is that the Federal Reserve does with their Fed funds rate, it has a lag period to it. It takes 6 months to a year before it starts to impact the economy. So even if they were to adjust interest rates today, it would have a psychological impact on markets, and you would see a market reaction to that. But the reality of what it is that we would face within the economy takes 6 months to a year. So an interest rate adjustment would essentially be non-existent within the economy for 6 months, at least. And if that's the case and you have inflation rise, which most likely is going to happen off of expectations, then you're going to lower the real interest rates, and that's going to make the economy less restricted, if not accommodating. Who else is describing that? Like, hit the like button if I'm the only person who's describing that to you. Yo, Simon, if that kid is good at painting, my boy making close to 50 per spraying paint. I tell you, I doubt you would be able to get back on ladders to do exterior, but if it's interior and it was just like, maybe like getting up on shorter ladders, he would totally be down for it. Like, he would totally paint all day long, I think. It was funny because he was rolling out the last little bit of one of the walls when I got home. And I asked him, I said, are you having fun, dude? I said, are you enjoying it, is what I said. I didn't ask him if he was having fun. I said, are you enjoying this? And he was rolling out. He says, yeah, I kind of am. And I'm like, yeah, I kind of enjoy rolling out the last little bit too. It's like that final little bit of job, Thank you for 1,000 joules. Wow, John, that's really impressive, man. I don't know what I wish I understood these gifts better. The GOAT trophy. I appreciate it, man. That is so good. The GOAT trophy. Thank you. Poor Luna. She is so lost without Freddie around, aren't she, dog? She just can't help it. She's just whining all over the place. I don't know if you can hear her, probably not. But she is just missing Freddie so bad. Here, let me see if I can show you. Your nose there. Come on. Yes, I know. You're a beautiful girl. Yeah. You can hang out with all-nighter, huh? Is that what you're going to do? Yeah, I haven't seen wildfires up in our area yet. I haven't had any smoke issues or anything like that drifting down, but it has definitely come ripping through Oregon in some areas, especially after all the lightning that we had over the last few days. It has definitely started to happen. Pretty dog, yes, she is. I am pretty sure, like, I mean, she's definitely husky. She has that in her, but I think she's coyote. Like, I really honestly think that she has coyote up in her by the way she acts and some of her just behaviors and stuff like that. It's just really, I've never seen a dog quite act like that. Like, there's huskies have a weird kind of attitude about them. I've never had a husky before. So already she's kind of got the husky thing going, but there's something else about her that's at a different level. That is a needy dog for sure. She is. She is a very needy dog. Painting is fun, but low paying trade when compared to electrician or plumber. Yeah, I mean, I guess you're right in that sense that, comparatively to the two, but to be honest, like the painters that I know, like who have like successful painting jobs, they all seem pretty chill, like people. Like, it's just like I don't know, it's just like the probably like the most chill of all the construction jobs out there. My black mouth cur talks lots too. Yeah. Owning a house and a dog is lots of work. Yeah, it is. She's loving you, Simon. In fact, she's smiling in what you say. Great show. Gotta go. See you, Brad, man. Thank you so much for being here. Painter get the blame for others didn't do. Yeah, I guess so. What's up, loonies? I know. She's just lost. She doesn't know what to do. Bear on the beach right in front of me. Oh, yeah. All nighters up there in Alaska looking at the grizzlies. What do you say to people that believe everything is wages, 20 minimum wage UBI idea? Well, good luck. Good luck to those people. If this is the mindset that you're moving into, that we need like wage at minimum, a minimum wage or something like that, a living wage, we need UBI. And you go into these sort of arguments and you go into these sort of mindsets of thinking, what you end up doing is you're looking for the reasons, excuses, beliefs, and all the other things that are going on out there within the economy that then, secure the idea that UBI is a good thing. The only problem with this is it will definitely distract you from positioning yourself in a way that you can actually take advantage of the situation, and mainly by moving into cash flowing assets. If you take on the idea that UBI is a helpful thing, useful thing, and we need to find reasons and excuses for it, then you will go and search for those sort of things instead of searching for dividend paying stocks, business opportunities, leveling up your skills, how it is that you can meet partners and the ideas and businesses that you want to be in. All those things will then be set aside because you will be more in line with trying to find the excuses, reasons, and belief systems for that of UBI or minimum wage increases or something like that. And then try to then persuade other people into that same belief system so that you can have a better outcome and existence for yourself, which you could already have had if you just didn't bother with that and moved into cash flowing assets and how it is that you can move into those things. So it's up to you. Like, whatever energy that you want to move into, just think about those things for a while. You want to be like UBI recipient? Okay. Think about it. Just think about what it is to be a UBI recipient. Don't think about business opportunities. Don't think about asset allocation. Don't think about, networking. Don't think about any of that stuff. Think about the politician that's going to give it to you. Think about who it is that you could vote for it. Think about all the reasons and excuses to why it is that you need this in your life and not the asset allocation. Because you don't want to think about asset allocation. You want to think about UBI. And that's what will happen, right? Corkfish says UBI will increase addictions. I don't know if it'll increase addictions. I mean, addictions are already pretty rampant, right? Uh, Careful of cash flowing assets that depend on UBI people. Actually, I would be more in line with that. Like, what is it that UBI recipients would be buying? And then I would get into that, because then it's almost like a guaranteed purchase that's going to happen. John, I had to pull a loan to fix my transmission. I would have took the UBI instead. Deplorable says, I just told you it doesn't mean anything. Calm down, Kirk. Government rec. Oh, I mean, government based section UBI divided. Um, well, here's the problem with UBI. Here's the ultimate issue is that it doesn't like people can talk about all the awesomeness and stuff like that that comes from it, but the reality is that the underlying economic forces will play out. And now to know that if you have ever increasing amounts of new money, whether that comes from a silver mine, like Cantillon was describing in his essay, whether it comes from war effort, you just literally go out there and take it, whether it comes from your production or it comes from debt issuance, it all going to go down the same way. If you bring new money into the system, you know what ends up happening? Separation between the rich and the poor. And it doesn't really matter who you give it to. You can give it to the rich first and they'll keep it, or you can give it to the poor and then they'll give it to the rich. And you can just tell this will happen because essentially stimulus packages and handing out of money to the households during COVID increased household savings. And then after the household savings diminished, it all went to the rich and there was bigger inequality. So after they were done holding on to it for a second, they gave it right back to the rich because if the poor don't have it, who does? All right. If the poor doesn't have it, who does? So if you give it to the poor and they don't figure out a way to hold on to it, getting into cash flowing assets, like not being poor with it, right? Being an asset holder with it. If you do not move into that, then eventually you'll just give it right back to the rich, and then the rich will have it, and then you'll wonder why it is that there's bigger inequality. It's because all this UBI that was handed out to the people who then gave it to the rich because they didn't hold on to it. They didn't position themselves accordingly with it. Um, uh, let's see here. It is interesting. Own if they are confronted about it, they turn to socialism. Do you think they will ever wipe out debt like they used to do in ancient Rome? No. Do you know what would happen if you wiped out the debt? Every single retiree would go immediately into starvation. They're going to do that anyway at some point, but then it would immediately happen if you wiped out all the debt. You got to think everybody's leveraged off of everybody else. There's no production. There's no real production of goods and services to meet the living standards that we have now grown accustomed to. And the fact that we can produce as much money as we want to pay any debt that we want to any size, to any extent, to any length into the future with zero chance of default. Zero chance to default. Now, that's not a joke. That's not being like facetious or anything, like none of that, right? That's the reality of the situation. The United States can pay any bill it wants, to any size it wants, to any degree into the future because it has a printing press to do it. What it cannot do is guarantee the purchasing power of those payments. And this is an unfortunate circumstances is that the people who are benefiting from these payments will find that that benefit will diminish going into the future because all the creative financing in the world does not produce real goods and services. And this is the problem that we face here in the United States. It's one of the reasons why you're not going back on a gold standard. It's the reason why there's going to be ever increasing amounts of inequality. It's the reason why good manufacturing jobs are not going to come back here. It's all the problems that we face. We are going to continue to get that into the future. And at some point, those payments will not buy goods and services. And all the creative financing in the world doesn't produce goods and services here in this country. We buy those from other nations. The debt is fake. The debt is real. That jubilee, we could only wish. It's a hypothetical situation that will never exist. Right? It will not happen. I've heard about it a million times. It won't. I mean, if it does, everybody is going to be panicking in the streets and people will be starving. Old people will be suffering and misery and, crisis. It will be horrible. It's interesting how people still believe we are the petrodollar when we have AI deals with Saudi and we are trying to front run blockchain, not crypto. I wonder how many people would buy into modern Cantillon style portfolio mutual fund. Think about using tools at your disposal to restructure your unsecured personal debt. It's a small way to reduce your debt overall. The debt is fake as long as we have a military. Your job is to stop behaving like the people and start behaving like the vampires. It's actually not too far off deplorable. Yeah, right? It will push crypto, but not initially until instituted. Remember the golden rule: those who have the gold make the rules. Therefore, poor will continue to slave away until the AI robots kill them. Isn't that called the all-weather portfolio? Googling vampire mutual fund. They will continue to bail out asset holders, and as far as the minions go, they must minion and pee in the mines. We have to play the game without becoming corrupted men and women. Yeah, I mean, what are you gonna do? I would imagine, just like everything, power corrupts everybody in their minds and everything that's going on. But I mean, if you could kind of understand the situation and face it head on with intent and meaning behind it, with actual importance, maybe you could. But the more people who move into that direction, the more human psychology will kick in, and you'll find the corruption start to happen. So. All right. Going to Chat GPT, who will make USA pay off the national debt? There is no paying off the national debt. That's not a real thing. Or that's not a real thing. Have you ever looked into the meaning of the Wizard of Oz? Yeah, following the yellow brick road back to the gold standard, and the guy behind the curtain pulling all the strings. It was a metaphor for what was happening within our country at the time and the rise of the Industrial Revolution. In fact, each one of those characters kind of represents a different character or a different aspect of our country at the time. The Tin Man, being the mechanical portion of it, and the courage of the lion, all these things. All of them just represented a different part of what was happening, not only within the economy, but within the country itself. And, to kind of look through those metaphors and to actually watch The Wizard of Oz with that idea behind it, it's actually very telling and a very good story behind it. All right. Very good, Simon. Yeah, right? I mean, you got to think, guys. I study this stuff every single day. There's really nothing that hasn't come across, like I haven't maybe looked deep into everything that's out there, but it's very difficult to bring something across my desk that I haven't at least heard something about and took some sort of thought about at one point or another. Like I've had too many people ask me too many questions, you know, and so I have to think about too many different scenarios and too many ideas to think like, I mean, I know there's stuff out there that I'm missing. Like you can't possibly see it all. I mean, the key to understanding is there's things out there that you just don't know. And every day I learn a little bit more about how it is that I have internalized the monetary policy and then different viewing of this monetary policy in ways that now says, man, even the way that I was looking at it a year ago is different from the way I'm seeing it today. And the way I saw it a year ago was differently than I saw it the year before that. And every year seems to be a little bit different from the previous years on how it is that I am viewing this monetary policy. Somebody told me, like in a comment, they said something about like, you know, you should read the Lords of Easy Money. They talked all about how it is that the Federal Reserve uses their communication. So you're not the first one, obviously, or something of that nature. I can't remember exactly how they stated it. And I'm like, if they explained neutral interest rate policy, R star, lower bound, the accommodations of the Federal Reserve in relation to that neutral rate and the rising inflation expectations going into the future and how that all operates, I would be very surprised that it would be described so well in that book that you can observe how it is that that rising inflation right now or the expectation is going to ease economic conditions. Now, I didn't read the book. Maybe that's true. All right. Maybe it's all up in there. And he described the credible threat theory, or she, I don't even know who wrote the book, you know, described it as accurately as I have so that you can see it in real time today. Maybe it is written in that book. I doubt it. You know, the reason why I doubt it is because there's literally nobody else out there who describes anything within the economy the way I do. Literally no one. Not a single person. Beautiful dog. Thank you. All right. How would the Crypto Clarity Act impact national debt? Well, I think like the overall idea behind like stable coins or a central bank digital currency or something of this nature is the idea that what it is that's going to be backing the dollar. So now here's the problem we really face is that the Federal Reserve is in a position in which that they can't necessarily be an issuer of stable coins or central bank digital currencies. It's not really within their charter. And now you could change the way that the laws are written and how it is that the Federal Reserve is operating, or you can have companies create a stable coin, use that dollar, the Federal Reserve liability, to back the stable coin. And then anything that's going on with the regulations, as far as the government's regulation on stablecoin, will then be in the government's control and not part of the Federal Reserve and what it is that they are doing. So now they have separated themselves from the stable coin, the regulations within it, and the government, dealings with all that stable coin. However, if these stable coins are using dollars or very close to dollar equivalents like short-term treasuries or even commercial paper, this is essentially going to give the Federal Reserve and their ability to conduct monetary policy and have that monetary policy transfer right into the stable coins. And they don't even have to regulate it or do anything with it. They just conduct themselves like normal. So this is really what I see happening with all the Clarity Act and this Genius Act and all the other stuff that's happening is that I really honestly see the Federal Reserve setting themselves up in such a way that they don't have to be the contributor to the purchasing of treasuries in the dramatic fashion that they have been. Other entities out there who are essentially wanting to issue out stable coins will have to use those treasuries and those short-term commercial paper in dollars to back those stable coins. And now if you have many corporations all over essentially, creating their own stable coins and all of them having to follow the same regulations as far as if you want to issue out a stable coin, then you have to back it with the dollar. Think about how much demand for treasury debt could exist during that time. It's not just the Federal Reserve doing it now. Federal Reserve is going to be moving into a position in which that they are going to have to figure out something to buy without driving the United States into an unsustainable debt path. The problem with that is they really don't have anything else to put on their balance sheet except US government debt. But we know from the history of our research and everything that we have done, we know that Ben Bernanke, way back in early 2000, or I guess late 2002, had a speech talking about deflation and how to prevent it from occurring here. And in that speech, he straight up said it, that the Federal Reserve could buy the debt of a foreign nation and put that on their balance sheet as well as domestic government debt. So now, holy moly, what could that look like? What kind of environment would that be like? Nobody talks about that. Is that real? Absolutely, it's real. Has it happened? No. Is anybody talking about it? Not that I can find. The only person I heard talk about it was Ben Bernanke over 20 years ago. But it's a real thing. They already have the legal authority to do this. 16-year-old Dorothy from Wizard of Oz was placed on a heavy cigarette, black coffee, and soup diet to keep her weight down for that film. Jeez, that was mean. Oh, yeah. I was put on a heavy diet of cigarettes, black coffee, and I didn't really drink or eat soup, but I was working at a lumber yard, so that's just what we did, drink coffee and smoke cigarettes. All right, the company Tether issues USDT backed by short-term treasuries, and now Tether is one of their top 10 buyers of US debt. See? No. People really want there to be a disaster crisis scenario. Like, I think that they want to almost expect it or hope for it so that they can get a decent position in their life when they could be taking a decent position right now by their understanding of it. Think about this. Do you really want to win the lottery? If you just said yes, that you really want to win the lottery, then most likely you're probably going to have a very difficult time trying to operate within this economy. Like, winning the lottery sounds great, right? Winning all that money, wonderful. I never buy a lottery ticket. Even when people are like, dude, it's up to $1 billion. I was just like, that's cool, right? I don't know what it is that all that money would do for me. Like, I can imagine like blasting it on a good time and driving cars and doing all kinds of stuff. Okay, yeah, great. All these like, toys and stuff. But then after you have all that stuff, what is it that you're really working towards? What is it that you have going on in your life that gives you any kind of like, drive for your passion and stuff? I think about it right now. I can do just about anything I want. What I really want to do is be successful at sharing this information. That's what I really want to do. I want to be on a journey that says, man, you are following exactly what it is that you feel is appropriate for your outcome in your life, and you're going to get rewarded for it if you do it right. That's like the excitement that I feel. Winning the lottery, sure, yeah, let's go drive some nice cars and go, go to some cool places or something like that. But at the end of it, are you really going to be like, feeling like you're moving towards something that was really intended on your life goals? Like, I mean, is this really what you were put on this planet to do, was to win the lottery and blast it all in good times? I mean, maybe that is your life goal. Maybe that's what you needed. But for me, I can do whatever I want right now. And what I want to do is be successful at this. I know people whose retirement plan is winning the lottery. Good luck with that. All right. Let's see here. The way I figure it, if you can continue to double your income through this year, you're gonna be on top. There's no place like home. Yeah. The original Lindsay Lohan. And then they tell you that's not living. I don't think we're in Kansas anymore, Dorothy. And your little dog too. Are you kidding me? We are living through the disaster. Are we really like, I think about it right now, are we really living through the disaster? When you have so many opportunities to do so many awesome things right now, when you have so many awesome inventions, so many cool technology, so many cool conveniences, so many awesomeness things that are happening, and we're really living through the disaster, or is it really just a disaster for you? Because some people out there are really loving it, right? It's not a disaster for them. Yeah. Manifesting is only possible if you are positive and working towards your goals constantly every second of the day. Yeah, John, I totally believe that. Okay? And I really think like the universe provides in ways that you weren't expecting to. Like, in fact, it never does it the way you're expecting to. Most of the time, people's egos get in the way of the universe trying to give you what you want. And I don't and that's what's really funny about it is just like people are like, "Oh, dude, you're gonna get into the hippie stuff again." But the reality is that's how I was able to acquire a lot of the stuff in my life was by literally letting go of expectations, belief, importance on things, and just kind of saying, "Well, I don't care what happens. Like, what up? Like, eh." Like, I literally, what's the worst that could happen is like a lot of what was going on in my head when the channel was taken off. Getting invited to go speak for the first time at the Rebel Capitalist, that whole experience just scared that, like getting up in front of all these people and speaking for an hour without any like experience of doing something like that. And, the whole time I'm like going, oh man, am I going to be able to do this or whatever? And finally coming to the understanding, it was just like, what's the worst that could happen, dude? You gave it a shot, and if you screw it up, dude, that was a cool experience getting that far. So just let go. And that's what I ended up. Well, I couldn't really, but that's what I tried to do. And ultimately, it worked out pretty well for me. And the more I let go, the more I realized, man, things can actually happen when you do. The more you put an ego trip on it, saying, man, it has to go down this particular path, it has to look this particular way, you know, without like when people put such importance on something like that, it ends up becoming a very negative energy in its own. Like having high levels of importance is like is it like a degree of repelling, and it literally pushes things away from what it is that you really want. That's why most people can't get what they want, is because they have such a high level of importance on everything. And when they put that high level of importance on it, it becomes very, very hard to deal with, very disingenuous. It becomes very difficult to operate as far as like people know, right, that there's a manipulation happening here. There's an expectation that needs to occur. But when there's just an event happening and nobody has any expectations of anything happening from it, it's just a flow, right? There's good times, there's positive, there's, great outcomes that come from it. And when you have a belief system that says, man, I have these particular goals in mind, I have these things that I want for my life. And when you want these particular things in your life and you start moving towards them, you find resistance. Like almost immediately, you start finding resistance. You start finding like it's just like, okay, so I want these particular things, and you think about it. Okay, I'm gonna have like whatever goal in mind, and then the next day you go out and immediately you start getting faced with things that directly are against what it is that you were looking for. They immediately start happening, right? You find every single thing that you would have done to try and get in a particular direction is met with hard resistance, difficult, and then at the same time you have other issues that come up that keep you from achieving what it is that you felt like was like the direction in which that you were going for. All this negative stuff starts to immediately happen to you that draws you away from what it is that you were intending. And then people give up, right? Because that's exactly what happens. You put this idea out there. I want to achieve this goal. I want to start this business. I want to get this sort of income. I want to meet these sort of people or network in this sort of way, right? So you put that out there and immediately it gets hit with a ton of resistance from every direction. No matter what you do, you get resistance in the attempt, you get resistance in, other things hitting you that prevent you from attempting to do those things. All this resistance starts to take place. And this is where people give up. Now, leaning into the resistance, leaning into the tension, like whatever issue came up, you deal with that issue. You have to face that. This is the universe preparing you for what it is that you wanted. Like you wanted this thing, and if you want to achieve it, then you have to have a certain amount of skills and experience. And if you don't have it, then you have to be punished. You have to be punished until you get it, until you understand it, till you've learned the lessons, so that you don't face the consequences of what it is of that painful experience that the universe is trying to prepare you for, so that you can actually have what it is that you were wanting. But if you never experienced what it is that the universe is preparing you with, then you're never going to be able to achieve the outcome, because the moment that you get there, you're going to find that there's going to be something that comes up in your life that takes it away that the universe was trying to prepare you with. So you have to think, man, this is the signs that I am looking for. The moment that I find resistance, that's the good sign. Right? That's the good sign. That's the sign that says, yes, this is where it's at. It's in this resistance. So once you start leaning into the resistance and you start dealing with the problems that you face there, you start leveling up. Right? And I face this exact same thing. This is something that I have just recently been dealing with. I myself have figured out that it was just like, man, there's certain things within this business that I don't like to do. If I don't do them, the business can't grow. And I don't like it. It was just like, I'd rather do the business without that. It was just like, well, that's not the way it works. Right. And as much as you wish and hope and dream for it to be that way, your little egotistical mind cannot possibly change the way that it has to be done. It has to go down a particular road. And you have to let go of the egotistical mindset that says, I don't want to do it that way. Right? Like, I want it to be this way. Okay, fine. Here, find pain and consequence from doing that. Maybe if you let go, lean into the tension, deal with what it is that you're trying to resist and keep out of your life, and you lean into that and get it, and then say, okay, I'm going to deal with these problems so they're not a problem anymore. Now you leveled up. And this is how most people end up failing. It's because they literally they ask for it, and then the moment that the universe says, okay, cool, yeah, we'll give it to you. Here's some pain. Here's some pain and frustration and difficulties and hard times and opposite of what it is that you're looking for. And then people are like, that's not what I wanted. And I was like, well, of course it is. Absolutely it is. Of course it is what you wanted, right? It wouldn't have been happening if you didn't want it, right? Because you want it, now this is happening. So if you can deal with it, then you get what you want. That's what you wanted. So here it is. Go deal with it. Now that's really where the pain and suffering that most people experience say, man, that's not what I don't want to do this. Okay, then don't. Right? Then don't. Attaching your ego to something you think you cannot attain probably allows Jung's shadow to start manifesting. And those are the traits the person's dreaming about the unattainable goal doesn't want. Yeah. And I found that that's my biggest issue that I have found within my life has always been my ego. I had such a tunnel vision on things that I literally resisted and blocked everything out of my life from actually coming into it. It was the moment that I finally just gave up and says, I just don't care anymore. I don't care what happens. I don't care what fails. I don't care. anymore. I'm done caring. People are like, dude, don't you? Nope, not important to me anymore. Don't care. And it's just like, well, you got to care. It's like, I don't have to care. In fact, when I do care, that's when things get a problem. I'm not going to care anymore. There's no more importance on any of this stuff to me anymore. The more I started to do that, people were like, dude, you monster or whatever. And I'm like, I don't care what you call me. Okay? I really don't. At this point, I'm done. I've given up. I don't care. I showed up for work. I took my money down and paid off my debts. Didn't care if I had a debt or not. Didn't care if I had the money. Didn't care. Right? Didn't care if I had the money. Didn't care if I had the debt. Didn't care about anything. Didn't care that I was walking to work. I just didn't care anymore. Right? Everything was just screwed. Whatever. It's like it wasn't even screwed. I didn't care that it was screwed or not. I didn't care that it was working. I didn't care that it was failing. I just didn't care. And it seems weird, but it was at that moment that everything finally started to happen. And I was able to get the YouTube channel going because I didn't care if people made fun of me. I didn't care what people thought. I didn't care. Right? I didn't care if I made a video. I didn't care if I did. And when you stopped caring about stuff, then now the resistance isn't there. What resistance? How could you possibly have any resistance if you don't care? The only time you have resistance is if you care. So I had no resistance in my life. People were like, dude, you got to care about this. And I was like, I don't have to care. And then I realized, man, all these opportunities, all these other things. It was just like, hey, man, do you want to go and do this? It was just like, yeah, I don't care. Sure. Right? You want to do an interview? Yeah, I don't care. Absolutely. You want to make more videos? Absolutely. You want to make more money? Yeah, I don't care. Absolutely. Let's do it. I don't care. Either way. All right. The ego tries to control reality. The universe needs you to accept reality. Really, it just comes down to that. It's like, I personally think, man, I thought I would have been a lot more successful than I am now. I think that. It was just like, nice ego, bro. Right? Like literally nice ego. You don't think that you're actually doing it, trying, attempting to make it happen. Like this is the universe preparing you one way or the other. Like I have to tell myself that everything that you're experiencing, even the downturn and the, algorithm and the YouTube and all that other stuff, all of it, every bit of it, no matter what it is, it's all in preparation for the next step of whatever it is. Sometimes I wonder if what's happening within that algorithm that's happening here is literally an attempt to try and push me into something else. It was just like, dude, you're done with this. Move on. And I've literally considered that. It's just like, maybe that's what's going on here. It's like, take your focus off of this and move on to something else and start focusing on another area. And sometimes I wonder if that's what's happening here. And if that's the case, then maybe I should. And it's just like, who am I to again, I'm not trying to be egotistical. I wanted to be here. I love this, right? I love doing this sort of thing. But maybe the attempt should be put somewhere else, and that's me like trying to resist that from happening. Larry, thank you so much for being here. Yui in the house. Larry up in the house. Tried to help out another childhood friend, let them stay at my place, and it ended in an argument. Damned if you do, damned if you don't. I think the universe is trying to tell me to take care of me. Well, absolutely. Like, you have to think about it. Like a friend coming in and then like kind of punishing you in a bit of ways, like argument, fighting, whatever happened. Like you have to think maybe that your friend came in to give you that experience so that when maybe in the future, when you go in and take on a roommate, you're going to have a much different kind of consideration of what it is that's going to happen there, because of that experience that you got with your roommate. Like, again, lessons in life are learned, or repeated until learned, Might have been more successful with self-employment. Well, here's kind of something that I found. I pursue everything. Like I'm trying to start my own, like start trying to run this business, get this business up off and going, and being successful. I work a day job. I try to do side hustles. I try to do investments. Like there's no place that I don't try to go to, right? Like it's in everything out there. So whether it's self-employment or investment or working my business or working, the company I work for, in my opinion, the YouTube comment section is where the general populace come to do their ego's shadow work, express all the negative, crazy, impulsive, intrusive thoughts. Yeah. Well, in a lot of ways, it's a good place to go to dump that, right? Like you don't have to dump it on anybody personally that right? You can just get it out there. You can finally feel like you got somebody to share it with, even though it's like a superficial, but like does the subconscious really know that if it gets it out there and somebody else reads it? So, in a sense, like, it's like almost like the perfect place to go to is to dump it into a comment section. It means you don't really have to face it for real. Something that I thought about. You know what really is the channel's issue? Sarah actually when she was at the fair, she actually identified it really well. Now, she didn't necessarily relate it to the channel, but she identified the energy right away. And it's the same issue that I believe this channel is having that she recognized that was happening at the fair with one of the vendors. Now, while she was at the fair, she's there for like a week, right? They have to be there every day to take care of the animals. And she was thinking, I want a souvenir from the fair here, for this year. And she thought, oh, well, it would be nice to have a hat, right? She looks good in hats, and that's kind of like her thing. And so she was looking to see if she could find, a hat that would suit her. So she goes to this particular vendor who had these, hats that she liked. And now she immediately decided that she wasn't going to buy one. Like immediately, she saw the hat. She goes, "Oh, there we go." And she looked, and she was like, soon as like within seconds, she decided immediately that she wasn't going to buy the hat. She didn't even try it on. She turned around and left the vendor. So what happened? She said the hats were cute enough, you know, as far as that goes. And I was really considering buying them, except the hats were displayed in stacks. So there was like, I forget how many she said, like a dozen hats, right? But each hat was in a stack of like 25, right? So there was these stacks of hats. And she looked at the hats and thought immediately, well, that's kind of cool, but then saw all of them and they lost all their appeal. Like immediately, boom, no value to them whatsoever. She didn't want. She didn't want one of these hats. There were so many hats there. All she could, and I asked her, I said, subconsciously in your head, all you could envision was everybody at the fair wearing these hats because there was so many of them there. And she goes, yeah, that's exactly right. There was so many of them there that all of a sudden the value of them just fell. And there was no value because there was so many of them. It was so abundant. Okay? And all she could imagine was everybody buying one of these hats and everybody at the fair wearing one. If those hats had been on a rack that had maybe one or two of each one of them out there on display and then got replaced as they were purchased, the customers would feel, oh, look at this. I'm getting this really cute hat, this really nice hat, this really awesome hat, and there's only two of them here. There's only one of them here. So it gave it value, right? Gave it uniqueness. It gave it scarcity. And so when I think about how it is that she lost the appeal to buy this hat just because of the abundance of hats that were sitting there that essentially anybody could buy, there was no value. There was no value given to them, you know? And that's really where I feel like the channel has something of the idea of a stack of hats, right? So much video, so much content, so much deploying of information out there that people really out there in the greater community have really given it less value. If it's always there, if he's always giving videos, if he's always talking the same things over and over again, what value is it? Okay. Very similar to the stack of hats. Now, those who recognize the information that I have put here know that it's not anywhere else to be had. And so, although for some people it might be a stack of hats, for other people, there's nobody else in the entire world who's a vendor like I am. So the hats that I have don't exist anywhere else. And although there may be stacks of them up in here, you're not going to get them anywhere else. All right. Too many people process success monetary. That's a loser. I think UECTT book is coming soon. It really is. I'm getting better to the understanding of what I want this book to be. Right. And it's not like I was at first, I was trying to make a book and I wrote chapters out and stuff like that, but I was trying to explain monetary policy, and that's not what I should be doing. I need to build a guide to economic forces. And that's really what it is this guide to understanding economic forces from your own point of view, because I could talk about how it is that policy works, but it's going to be very difficult to understand how it is to internalize that, to use it for your own for your own purpose, for your own positioning. To be able to have a guide that says, here, you can now internalize this through a lens that is unique to you so that you can position yourself in your own way. It was funny because it was brought up the other day. It was just like, hey man, if you were given like $30,000 or $60,000 or something like that, how would you deal with it? Or what advice would you give people to deal with this? And I'm thinking what I'm going to do is different from what All Nighter's going to do. And it's going to be different from what Justin's going to do. Right? Every one of us is going to do something different with that. And we're all looking at the same information. That's what's funny about this is we all know what we would do with that money from our own position. To give advice to somebody else, well, I don't know. What are you looking to do? What do you want? There's that lens is going to be unique. And it's going to be very difficult for somebody to say, hey, man, let me give you this idea on what it is you can do with $60,000 when nobody knows who you are. Right? That's impossible. But we can share how underlying economic forces play out so that you can recognize the position that you want to hold and how it is that you can position yourself for that. Which is, again, going to be quite unique. Simon, I'll buy that book if you do it, and I will buy a copy for my children and friends. And it will happen. Right? It will happen, guys. And I know I'm slow to the game on a lot of stuff, but I like to make sure that I'm doing it the right way. Like, I don't want to start a project that I'm not going to complete. And I could tell by the chapters that I was writing for the book that it wasn't what I was wanting. It was good in the sense that, like, it would be informative, but it wasn't the knockout that I wanted, right? I want something that's like going to be the book that not necessarily, like, I don't want it to, like, I don't care about making me famous or whatever, but I want it to be the one that goes down as the most appropriate one that I could have written. And I don't want to just push something out to push something out. I want to push something out that is good, and useful and helpful and right. They are destroying everything, so there is less deal with when X occurs. The CTT already has a video series. It could be made into a quick book fairly easily, in my opinion. I totally agree, Justin. It really could. And in that sense, it would be, I think the video series would be a great book for describing policy and how to see policy really well. But I don't think it would necessarily deploy a good understanding of the economic forces that an individual could then use in conjunction with the monetary policy understanding. But really, like, the underlying economic forces of things like Gresham's law and the Cantillon effect and Triffin's dilemma and things like that really need to be understood fully so that people don't fall victim to like, well, why don't we just go back on a gold standard? Like if you could have already a like almost like a subconscious belief or knowing or so intuitively ingrained that you know all the reasons why the gold standard would be a difficult thing to go back onto, and the reasonings why it would be, and how it would be a very hardship situation for people to be able to internalize that immediately and know exactly why and how and not have to think about it, right? Will then give you an understanding on why not to think about it, not to internalize the ideas of like these people who say like, well, maybe if we have a gold treasury and stuff like that, like all these things are distractions from what it is that you could be doing with your time and effort. That's really what it is. There's distractions to keep you away from it. Yeah. Or to make somebody else more profitable because they sell something. Yeah. What AB video series break down how to interpret the speeches from the FOMC? Big Clippy, there that exists already. Right here, let me show you guys. It exists right here. Where am I going here? There we go. So you come up here to the classroom and come to this very first one, right? The low neutral rate trap. In there, there's this video series. These modules will break down in entirety all the credible threat theory that you would need to know, every bit of it. And it takes about probably 45 minutes to an hour. And what I would suggest that an individual do is probably listen to one of these videos once at night, every night, until like I would listen to like, the first one every night for like a month or a week or whatever, until it's like right before bed, and internalize it that way, and then skip on to the next one and then the next one. And so really try to get through this would probably take like a couple of months in order to like really internalize this information, because it's not easy. You have to break past beliefs and then internalize brand new beliefs, and to get through that takes time. So if you listen to this 8-minute course, like, right before bed, and you do that, every night for like a week or two, like I would say an entire month, but if you did it for an entire month, there's no way you would not get it. Right. But if you did it for a week, you'd probably do just fine, and then move on to the next one and then the next one. And what you're going to end up with is a really good understanding of how it is that the Federal Reserve uses the expectations to push the neutral interest rate around. It's going to make a lot more sense. Back at the classroom, you can find the credible threat theory. This is all the speeches, right? These speeches, and let me bring this one up. Come on. There we go. So this is Ben Bernanke's speech, the one that I always bring up. You can go down and find all these highlighted areas that I have went and marked out in these speeches. So you don't have to go and find them all. They're already highlighted out here. These are PDFs that you can download, right? So if you come join the community, you're going to have access to all these speeches that I have found that are all highlighted, all ready for you to go and review. Right? They're all there, right? All these speeches. You can download those PDFs and give them away. Just do whatever you want with them. I don't care, right? Those are yours for my gift to you for being a member of the community. You have access to all those speeches, every one of them, even this one down here with Powell, right? This is a great one. This is from August 27th of 2020. This is the one in which he laid it straight out. He told you right here, here's the problem, right? The federal funds rate is now too low. Fed has no scope, right? Less scope to operate the economy at the lower bound of zero when the Fed funds rate are that low below the R star. He explains it right there. Here, in this spot right here, this is where he tells you that all the families are going to be faced with inflation. It's going to burden them, right? He said it straight up, for their food, their shelter, the gasoline. However, right? However, inflation that is persistently too low poses serious risk to the economy. So your inflationary scenario that affects gasoline and shelter and burdens the families, that's not serious. Inflation that is persistently too low, that's serious. Here, this speech explains it all out there. Even later on, he tells you, right, that they're going to be going for flexible average inflation targeting with, right, seeking average inflation targeting where they were going to allow inflation to run extra hot for an extended period of time. This is all written right here. They had no mathematical formula that defines the average. That's incredible to think, right? Seeking to achieve inflation that averages 2% over time, we are not tying ourselves to a particular mathematical formula that defines the average. They had no mathematical formula to define the average. People are like, how do they figure out the average? They had no particular mathematical formula that defines the average. It's all right here. He explains it. So that's my gift to you. You can go and get all these speeches all through here, each one of them. Lael Brainerd right here. This is a great speech. You know what she's talking about in here? The disconnect of inflation from employment. Everybody thought once employment fell to its low, unemployment fell to its all-time low, that inflation would take off. There's a huge disconnect between these two. She explains it completely in this speech. She goes on to talk about it right here. Oh, wait a minute. It's the next spot. It's down here somewhere. Here we go. Right here. She talks about this speech. This is what's incredible about this speech. Like, look at this one. This speech was delivered May 16th of 2019, right? Right up here. May 16th of 2019. This is before COVID. This is before inflation. This is before all the nightmare scenario that everybody's experienced that Ben Bernanke, or I'm sorry, that Powell had warned us about about a year later. What was it that Lael Brainerd was saying? Right here. One possibility we might refer to as opportunistic reflation, like literally says it right here, opportunistic reflation. Take advantage of a modest increase in actual inflation to demonstrate to the public our commitment to our inflation goals on a symmetric basis. Isn't that incredible? An opportunistic reflationary period where they were going to let inflation run hot. For example, suppose that an unexpected increase in core input price inflation drove overall inflation modestly above 2% for a couple of years. Holy crap, she describes it right here, what we were about ready to experience right there. Suppose that we got an unexpected increase in core import price inflation, very much in line with what it is that's going on right now. She predicted it back in 2019. Again, what was it? May 16th, 2019. Yeah. Those who want the information, you can get it. You can go back through all my speeches or all the videos that I did talking about all these speeches. You can go and grab all those speeches. You can read through them. You can highlight them yourself, or you can join the UE University. You can get those speeches for free. You can get a course that you can then internalize what it is and how it is that the monetary policy is truly operating. Those who have done it, you should see them in the comment section. You should see them at the webinar. Like some of these guys have done it so well, they have internalized it so well that they see it not probably as clearly as I do, if not better. All right. Let's see here. Can you talk meat and potato terms? Yes, I know. I was not a follower. Part of Kirk's ego shadow work is walking into the classroom style lecture and inserting his personal conversation not on topic to help derail attention on the speaker, expressing his school dissident. Whatever. I mean, I don't know where, like, people ask me, where is it that I could go to get this information? So I put it together. There it is, man. It's like there's the concentration of it, and there's a community of people that you can converse with to then share what it is that you need to share and think about and ask the questions in order to get the full understanding of it. People ask me to put that thing together. There it is, right? There it is, and it's awesome. It's absolutely incredible. In fact, it's so good. There is literally nothing that I could do on a video that would quite match what it is that we share with the conversation. I do not record those conversations. If you are not part of the conversation, you will miss it. Okay? There are some smart cookies in the school talk. Absolutely, Justin. Absolutely. Like the contributions are not just from like it's not just from like understanding from an economics point of view. It's understanding it from a life perspective. And that's really where the challenge starts to come in, is because people want it to be so generic, so like, how do I put it, like easily consumed, that it makes it almost impossible to actually really understand what it is that's going on. It's because your own personal view is going to be different. And that's how like I think this community is really starting to understand it in the way that we actually converse. Like there's so many people out there who want to tell you how it is, the way it is, why it's going down the way it's going down. But very few people will say, okay, well, how are you looking at it from your point of view? Because this is going to be really important. Like anybody who says, I'll tell you how it's going down and what they're doing wrong, they're like, for who? I mean, for the handful of people who might be positioned like you are, that's quite unique. That's not everybody. That's only a few people. And if that's something that you're going to be describing out there for the general population, most likely they're not going to understand their own position according to that. And again, let's set up a community. Let's talk about underlying economic forces. Let's share these views and thoughts, and in a way that says, okay, well, I want to be a property owner. How do I use this? Pretty good question. I want to own dividend paying stocks. How do I use this? I want to level up my skills. How do I do this? Yeah. These are quite, and everybody's going to be behaving differently. They're going to be positioning themselves differently. They're going to be pushed in different directions. Right. But we're all going to be looking at the same information. And that's where where the uniqueness comes in. That's why I have this channel. That's why that information is there. I mean, think about it. It's a $20 membership and you get it for a month, right? So you have access to all those videos and then you get to take all those speeches. Think about that just like there's over 20 speeches. You pay like $1 a speech to have it broken down and have a better understanding of what it is that's happening. And you get all those speeches and then you can internalize the credible threat theory that much easier. When everybody else is talking about, well, the Federal Reserve can't get to their 2% target. And it was just like, you would look at it and go like, they don't even want to. And I can tell you why. It's because there's 15 speeches that describe exactly what it is that they would want. And it's elevated, persistently high inflation. Not too high, but gosh darn it, trying to get to that 2% target that they've never once ever been at before. All right. Look at recent speeches for hints on what's happens moving forward. Yeah, you could. I think looking at recent speeches are just as important as understanding the past ones. Like if you have already gone through all those past speeches and you can describe the theory, the CTT, then you're probably good. You don't have to read the past speeches. You can just go with the forward ones with the new ones. But if you don't know the past ones, they're just as important as the future ones. In fact, I go back and I review them all the time. I am constantly going back and looking at old documents. Like even just recently, what did I bring up? Hold on here. Over at the community. Let's go look at the community again here real quick. What do we share over there over at the community? See, this one just popped up. Who was this just now? David, right? Mervyn King from 1995. Like this is one of our contributors here, David, right? David is big into stock trades. He's really big into it, right? And he loves the credible threat theory. He's all about it. And here he has just shared, right, this credibility and monetary policy theory. I have no idea what it is that he shared. He just did this just a few minutes ago, right? Now he's given his idea, given a short rundown. This is probably excerpts out of the PDF itself, out of this speech or this publication that came out. But this is the type of stuff that you get from the community. You get people who have internalized it. They're looking back all the way to Mervyn King, who is now on the communication task force for the Federal Reserve. Right? David has gone back and he's looking at Mervyn King's, stuff from 1995, right? And realize that this is a great read for what it is that we can expect here. What does it say? For a sample, quoted, but markets and for that matter, voters are naturally suspicious. The announced intentions are much more credible if there are incentives to pursue the stated course of action. A future monetary policy action is credible if it is in interest of the monetary authorities to enact this policy when the time comes. Hence, policy is credible when the authorities' actions are, as economists put it, time consistent. That is, the authorities have no incentive to deviate from their original intentions. See, this is the type of stuff within the communications of the Federal Reserve that you really need to understand and internalize, and to think that this guy was working on these strategies 30 plus years ago, right? These guys are developing this dude, Mervyn King, talking about how it is that they use expectations from 1995 is now sitting on the task force for communications. How many people are looking back and doing the research of what it is that this dude has said and what it is that he has communicated out there as far as his belief system for monetary policy? How many people are out there sharing that information? Here we have an entire community of people who are breaking that down for you right now. You can go and read what it is that David has shared with the community and his ideas of what it is that this research could offer for the future of monetary policy. And where else are you going to get that information? Who else is going to do that for you? The UE community is doing that for you. It's like it's getting to the point now. It's like it's taking on a life of its own. I can't wait to see where it goes next. In a couple of years from now, where that community is going to be so deep in its understanding that nobody will be able to touch it. In fact, nobody can touch it now. Nobody's talking about this stuff like we are. Okay? Like we are nipping on the Federal Reserve. We are nipping on the FOMC's heels. We are right there. Yeah. Simon is identifying the Wizards of Oz for us. Yeah. Read that second sample paragraph of that Simon Mervyn King. That was really good. I will. Thank you. Who was it? Investor's Eyes? I will absolutely read that. I want to thank David for posting it just a few minutes ago. It says the ability of the authorities to spring monetary surprises on an unsuspecting public allows them to exploit the short-term trade-off between inflation and output to achieve temporarily higher output. Anticipating this reaction, economic agents in the private sector come to expect inflation and to build such expectations into their wage and price-setting behavior. Inflation will rise to a level beyond which authorities will not choose to spring further inflation surprises. And the results of this game between public and private sectors is an inbuilt inflation bias to policy. This is the dude, literally, this is the dude right here who's on the task force for communication. Literally telling you right now that they can use inflation expectations to create an inflationary scenario with surprises. He talked about this back in 1995. Do you not think that maybe just possibly over the last 30 years, use of even the AI, you know, application, that they have not figured out how it is that they can communicate exactly what they need in order to create the monetary policy that they are wanting? Who else is sharing this information? Very few people, right? Who's breaking it down? The UE community is. Thank you, David. Thank you for posting that, man. I really appreciate it. He found that, and you see, like, he went right to the UE community so he could put that. He didn't have to share that stuff. He could have kept that to himself. But he found it very important, and he wants to share it with the UE community because he wants to see how it is that the rest of the people are going to internalize that information and then share their views of what it is that they see from that. Every one of us is going to look at it differently. We're going to incorporate other ideas of what we have recognized from our research. Who else is doing this for you? Very few. Everybody else wants to talk about shadows on the wall. They want to interview other people who's regurgitating the exact same information everybody else is. Wayne broke down neo-fisherism just as good as Simon in the webinar. Yeah. In other words, we've fed God an ace up our sleeves to manipulate inflation and outputs by surprises. Yeah. Right? I mean, if Homeboy said it 30 years ago, why would you think that he wouldn't do it now? If you think and know and believe and understand how inflation expectation rises and lowers the real interest rates and how that works, what do you think this dude said 30 years ago might apply to today? Right? It's good stuff, right, guys? We're 43 people into this, 62 likes. Continue to hit that like button. Get this video out, share it around. Like, I mean, I shared all this lumber information in the earlier part of it. We're 2.5 hours into this video. We're not talking anything about lumber. We're not talking anything about all the wildfires that took place over the course of the last week with all the lightning. We're talking about the reality of the situation that we now face within this economy, and that is our personal view of the monetary policy. It's the only thing that's really important. Everything else is secondary. And you can see it because every time we fall right back to the same topics. How is it that we internalize this stuff for ourselves? All the rest of the information out there is essentially superficial. Like, what difference does it make? Can you pick up little pieces of evidence? Sure. How are you going to use this information? I don't know. What we're talking about here at the end, that's what's going to do it. I don't know what the rest of that stuff is going to do for you. The reality that we face is stock markets going down, the housing market's going down, and inflation is still going up. The housing market's not going down. I don't understand that. Down in which way? Right? House prices are higher now than ever. All right. I don't know who else is looking into the resume of the people being brought into the work for the Fed. Nobody. They don't care. Right? Like, they don't care like I don't care. They don't care like they really don't care. Like, they just don't, there's like, it's not important because there's no going to be no real views off of that. People want to get like entertained and superficial. They want to hear about how it is that they screwed it up. They have nothing to speak about. They don't know anything about those guys. They don't know anything about the credible threat theory. They don't know anything about the communication style. To think about it, they're going to end forward guidance and they hire two people to talk about communications. You think that if they were going to fire up forward guidance, they would want to hire people on communications. But no, they want to end forward guidance and then hire people on communications. Well, doesn't that seem a little backwards? Right. I think it's funny that they said, we're going to end forward guidance. We're not going to give you as much communication. We're going to kind of go dark. And then all of them come out and talk. Like, literally, we did a video the other day, like, War says, yeah, we're going to be quiet. And then, like, literally on that Friday, it was just like 5 Fed officials came out and had, like, speaking engagements with, like, news programs. It was just like, I thought you all was going fend forward guidance. I thought that was coming to an end. No? You're still doing it. Gotcha. They're hiring specialists to perform their specialty. Yep. And that's what's great about it is, like, we're, like, so on it with these people. Like, they're not going to be able to, like, they can't communicate anything without us knowing it. Like, even the idea, like, how many times did I bring it up? It was just like, good old family fight, making fun of it. War's just talking about the family fight. Right? And I'm making fun of the fact that he's using that term, a family fight. Like they're all dysfunctional or something. Warsh used that term 13 times. 13 times he's said it in different, like, addresses to the public. 13 different times he said family fight. It's more than any other phrase that he used. Do you think that maybe he wants to deploy that into the people's expectations that there's a fight going on at the Federal Reserve? It's pretty interesting. Every single one of them unanimously voted exactly the same way. What fight? That's not a fight. That's an agreement. It's 100% agreement. They're not fighting. That's not a real thing. They want people to believe that they're fighting, but the reality of the situation is they very much want to deliver an expectation within the people, and that expectation is one, we don't know what we're going to do. Got to wait and see. May have to raise rates. Don't know. Inflation's really heavy. Put that expectation into the people, and I push back and say, okay, listen, bro, you might have to raise rates, but even if you do, you got a stagnation within that Fed funds rate, the lag period that takes place. No matter what you do with your Fed funds rate, there's no adjustment to the monetary policy for 6 months to a year. And if the Federal Reserve was to stand still and inflation expectations was to rise, it would lower the real interest rates. So no matter how anybody wants to describe it, that's the reality of the situation. And I don't care whether you think it's a political move or a desperation move or, some kind of other economic, insider point of view kind of move or something. I don't know what it is that people are thinking out there. The reality of the situation is the Federal Reserve is going to end up sitting still with their Fed funds rate. Even if they adjust them, it doesn't matter. There's a lag. And the inflation expectation will rise because that's been pretty prevalent within the monetary policy delivery of forward guidance. Even though they don't have forward guidance, that's definitely what's happening right now. And if you put those two together, you're going to have a low real interest rate environment. So who else is describing that? Nobody. And I'll describe that over and over again because that's what's going to happen. That 13 times is code too. Imagine a lumberyard hiring expert salesmen at a time they are saying they are trying to slow down their sales activity. Yeah. Right. I like listening to your program. I'm an artist craftsman who works in mostly interior construction. Well, thank you. I appreciate it. I hope you get some good, valuable information off of this. I've been in conversation with a realtor, and they say, yeah, houses here in Rio Rancho, New Mexico, have been taking longer to sell, but they are still selling way above what I need. The same condo unit sold a year ago for 345 will never get 345. People are scared. I don't know. Yeah. Have I broke that whiteboard in yet? Actually, yeah, I did. I used it in a interview that I did the other day. I got a couple of interviews recently. It was pretty cool. I haven't been interviewed in a long time, and then all of a sudden it was like boom, boom, boom. I got hit with like 3 or 4 interviews. That one with Bitcoin.com was just great. Those guys did a wonderful job on the edit of that. And I thought it was a really good video. Considering like the dog and the kids and the people were like, just kind of all over the place inside the house, the interview itself, like the video, I think turned out really well. So I was very happy with that. And I was very, pleased with the idea that Bitcoin.com interviewed me. And it was just like, cool, man. I love being on the show. You're a good Bitcoin salesman. Yeah, I know. Thank you. I am. It was because I don't give anybody any false hopes about it. And I gave them a good reason to understand why they should hold it. And if you don't have any false hopes or beliefs about what it is that's going to happen with it, especially from the salesman who says, yeah, I really don't have much importance on it, but it happens to be one of the biggest positions that I have. They're like, what's going on here? Yeah. And I was just like, yeah, well, listen to these reasons why I have it and why you should have it too. And then most people who listen to that think, God, yeah, I need to start picking up about $50 a week or, every other week from now on forever. All right. Yui broke that. Oh, yeah. We talked about that. Guys want to see me? Let me see. Can I do a whiteboard video for you? Let me see. All right. Let's do whiteboard for you. So let's imagine this is the lower bound of 0. Negative interest rates, right? Negative. Like my handwriting. The Fed funds rate prior to the great financial crisis have been slowly moving closer and closer to 0. And they were around 2% when the great financial crisis hit, and they had to take the interest rates to 0. And they were there for like 10 years. It wasn't quite 10 years, but it was a long time. Now, the problem with this scenario is that everybody would have anticipated that it would have created a inflationary scenario, a hyperinflationary scenario. I know, like I believe that. I thought for sure if the Fed funds rate were this close to 0 and you had damn near 0 interest rate policy running at a quarter point or whatever, that the inflation would go crazy, especially with quantitative easing going where you're printing up all that money. This should have been like this, a hyperinflationary scenario, but it failed. See, it failed to produce an inflationary scenario, and now the Federal Reserve was stuck. They're stuck at this lower bound. Now, they tried to do something called autopilot, where they were going to let interest rates go up a quarter point every quarter for the foreseeable future. And they got up to like, I don't know, around 2% again. And this was like taper tantrum. And the markets hated it. They were like, no way. This is not something we're going to tolerate anymore. And so the Federal Reserve tried lowering interest rates a little bit here in 2019. And then COVID hit. And boom. All right. They took interest rates back down to 0. And they ran at the 0 lower bound again after COVID kicked in, right? So COVID kicked in, lower bound to 0. All right. Gone to the lower bound of 0. Now we got COVID kicking in and the Federal Reserve's at the lower bound of 0. The problem that we faced is that there was something called R star. Now, even before the great financial crisis, R star was getting very close to 0. And now R star is essentially somewhere right above 0. It's not at 0, somewhere between 0.5% and 1.5%. So I'm just going to say like this is 1 because nobody knows where R star is at. R star is when the economy is operating at its potential alongside low inflation with stable prices and full employment. It's like the Federal Reserve's sweet spot, right? It's where they would be when everything is just killer and awesome and everything's going good. But unfortunately, things were not going good. And the Federal Reserve was facing a problem with COVID kicking in. So they dropped interest rates to zero, right? The zero lower bound. And they could not get far enough below R star to actually stimulate the economy. This is the exact same problem that the Federal Reserve was facing back during the Great Financial Crisis. Same problem, right? Now, here we have a different scenario taking place because COVID's kicking in and we had a supply chain breakdown. So inflation, which had been running very close to the lower bound of zero, right, under that 2%, right, 2% up here somewhere, inflation all of a sudden shot up. Now, this is a very interesting situation that now takes place because the neutral interest rate, which is R star right here, doesn't give the Federal Reserve much room to stimulate. But if inflationary scenario starts to kick in, now there's a position. Oops, I'm gonna grab another color here. Which color? Let's go. There we go. We'll go green, right? So now there's a position right here where typically would be accommodating from that R star if you can get below it, but now the accommodation comes up here to where the inflation is. So ultimately, if the Fed was to take their Fed funds rate up to this position, they would be neutral. But so long as they keep it low, right, the accommodation continues to grow. So the Federal Reserve kept interest rates historically low for a significant amount of time while inflation is running rampant. This made for an incredible easing in monetary policy. This was the end of 2021 into early 2022. This economic accommodation that happened right here, very few people understood or took advantage of. R star hasn't changed. It's still low. If this inflationary scenario was to be removed, the Fed funds rate, which is now moved up, right? Because the Fed moved the Fed funds rate up to be accommodate or to deal with the inflationary scenario. This isn't exactly right, but pretty close. The inflation came down, right? And now it's stubborn, or it's right below it, depending on which metric you're going to look at, right? So somewhere right in the realms there, right? This is where the Fed's at. So now this is the reason why they're saying they're slightly restrictive, right? Because inflation is like, somewhere right around there, and they have their Fed funds rate set up just above the inflationary scenario. But if inflation rises, right, the Federal Reserve will be accommodating. So really, the inflation bouncing around the Federal Reserve Fed funds rate right now, this is whether or not the accommodation or restriction within the economy has taken place. Okay. So the more inflation you have, if inflation was to rise, inflation comes up here somewhere. Now, much like you had back in here, you have this accommodation taking place. It would take the Federal Reserve moving their Fed funds rate up to a level that is going to be... What's going on, dog? What are you freaking out about? I don't know if somebody's here or not. Is somebody here? I don't hear anybody knocking. Oh, it's a deer. It's a deer in the yard. All right. Okay, so this is the accommodation that would be taking place if the inflationary scenario is to rise, right? So the Fed would have to raise rates up. This is what they're talking about in order to keep this accommodation from taking place. What I'm saying is this accommodation is going to take place anyway because the Fed, even if they were to raise rates, would have a lag period 6 months down the road. So this accommodation is almost baked into the cake so long as inflation rises. Now, Let's say, for an example, inflation doesn't rise and inflation falls. Right? So instead of having this situation where inflation comes up here, we have inflation come down to here. Returns to target, goes back to 2%. What happens then? Well, now the Federal Reserve is sitting in an incredible restriction. This is a restrictive economy happening right here. Before, when the inflation was up there, it was accommodating. The Federal Reserve was far below inflation, and if inflation rises, it was very accommodating, but inflation fell down to 2%. Now, the Federal Reserve is incredibly restrictive within this economy. All right? So with this restrictive economy, what is the Federal Reserve going to do? Lower Fed funds rates. All right? So if they're going to lower Fed funds rate, all right? So if you have the lower bound to zero, all right, and you got this R star environment, and you got inflation that is slightly above R star, and a Federal Reserve who is essentially up here, right? Because they're elevated right now, but the inflation fell. So now the Fed has to drop down in order to be neutral. Well, if this inflation is at 2% and they achieve the 2%, everything's cool, right? Hey, sweet spot, everything's awesome, no problems. But if we run into a downturn, which we will at some point, when this inflation starts to fall below the 2% target and the Federal Reserve has to stimulate, they have to get far enough below R star in order to stimulate. They're going to hit the lower bound to zero. Because typically, the Federal Reserve would try to stimulate the economy with the dropping of interest rates by dropping it 5%. Well, if the inflation's at 2% and R star is at 1 or 1.5%, they hit the lower bound, they're not going to have 5% of interest rate adjustment here. Their interest rate adjustments would have to go down into negative territory 5%. Or 4 to 5%. And that's the situation we now face today. The Federal Reserve cannot stimulate the economy with a lowering of interest rates. It is not possible. It is impossible for the Federal Reserve to do because of this lower bound of R star. The relationship of R star in the lower bound. There's not enough room in here to stimulate the economy. It just doesn't exist. Now, if inflation is running high, it's up here at 6% or something like that, and the Federal Reserve has their Fed funds rate down here at the lower bound of zero, then hell yeah, there's a ton of an accommodation happening within that. But the Federal Reserve has to be down here at the lower bound of zero while we have this inflationary scenario happening at the same time. Those two don't exist. They're not going to exist like that. Make sense? All right. Do you like my whiteboard video? All right. This actually helps understand better UE things. Yeah, Larry, you bet, man. I hope it does help. I love breaking this stuff down, and I can't see it any other way. At this point, somebody could be like, oh, dude, have you ever heard about this idea about returning to the gold standard? And I'll be like, oh, God, not another one of these, right? What I just shared with you, nobody else is going to do. They don't know. They don't understand what it is that I just shared with you. I don't care what level of understanding of economics that they have. They're not going to share what I just shared with you. They might understand what I just shared with you. They're not going to do it. And I don't know exactly why, other than their understanding of it is such a top-down view that they could never see it the way I saw it. For a second, I thought that was a WWE belt. No, it's the belt I got from Zuber's conference, man. Zuber's cool as hell. Where's my ring? All right. Freddie plays with it all the time. I don't know where it's at now. Oh no, it's right there. Right? Look at that. Championship. Look at that. The little championship ring. Oh, look at that sucker. Isn't that thing awesome? Yeah. Zuber's the best, man. Zuber is absolutely the best. Look at that. See this Pelican case? See this Pelican case? Check this out. Look at what he gave me. It has my name right on it. You can't see it because it's black. Up in here. Get this case out. Look at that. Boom. You got the uneducated. Look at that. Right there on there. Uneducated economist shit. Mike Zuber for it, man. Mike Zuber's the best. All right. Did you guys have fun today? I think we're done. How long have we been at this? 3 hours? I need to get something to eat. I think my family's going to be coming home soon too. You can't send people to places USA destroyed. The whiteboard visualization was very helpful. Thank you, Simon. Will do my best to join the call Saturday in the school. Thank you, Big Clippy. I really appreciate it. Can you answer my question up there? All right, Justin. Oh, good Lord. I got hiccups. Justin, I just see you're a good Bitcoin salesman. Can you answer my question up there? Was it up beyond that? Hold on. Imagine a lumberyard. Where is it at? I don't see any question yet, bud. Pfizer Zuber's book. Oh, prefers Zuber's book on Amazon. Yeah. Like, you got to think, like, how many people out there are really sharing, like, trying to build a community of people who are doing exactly what it is that you're attempting to do. And that's really where you want to join in on the right community, right? Like, I mean, if you're trying to learn to do stock trades, you want to, you want to get in a community that does stock trades. If you want to learn how to do rental properties, you join a community that wants to do rental properties. If you want to learn monetary policy, then you join a group that is really studying deep into monetary policy. And this is really how you do it, is you got to find the right community that's going to give you the position in which that you're looking for. And you're not, like, if you want to understand real estate, you don't go to a gold salesman. Right? You don't go to a gold salesman to figure out about real estate. You go to the people who do real estate. If you want to learn about gold, you go to gold dealers. You go to miners. That's the direction you go to. I'm just wrapping up my boat work, then headed back to the bunkhouse to get ready for tomorrow's flight. Seriously, what's the point of learning stuff you can't control? Well, what do you mean that you can't control? Like, you can control every decision that you make and the meaning that you have given it. So, like, what's the point of learning all this stuff? Because you can control. You can control the meaning in the decisions that you make. So if you don't think you're in control of the decisions that you make, then yeah, I don't see the point of this at all. But I think most people understand that they are in control of the decisions they make, all the good and the bad. I've learned stuff for learning's sake. Yeah. Learning how to operate. That's the hardest part. That was a fun whiteboard breakdown. I love those things. Like I could describe I could describe the CTT from now on. Like I could just do it over and over again for people. I can explain like why it is that, to view the neutral interest rate, to even look at it in such a way that says, if you keep those nominal interest rates high enough long enough, then you'll start pulling the inflation expectations higher, or it'll pull the inflation higher. To understand how and why that would work is like, that's very difficult because most people would look at if you raise rates, you lower inflation. If you lower rates, you'll raise inflation. And that is absolutely incorrect. We learned that because of what I just shared with you. When the Federal Reserve hit the lower bound of zero and inflation ran persistently under the 2% target, that was a major problem for the Fed. Low rates caused a low inflation environment, and not a lot of people understood what was going on. Did the Fed say at some point they have to be 5% below R star for stimulation to occur? Third time I'm writing this. Is no one seeing this? Uh, to be honest with you, Justin, that's the first time I've seen that. I don't see that anywhere else in the comments. I believe it was in Ben Bernanke's book, in which that he talked about the limitations of the lower bound of zero and how the Federal Reserve would there was many estimates that the interest rates, the Fed funds rate, would have to go down -5% in order for it to be stimulating the economy. And now I would have to go back and read through that book again because I don't know if he was necessarily talking about the nominal interest rates or the real interest rates. Right. And so I would have to go back and read and review that. But either way, I think that's still a very telling sign about what it is that's going on at the time. Like they did not have enough room to stimulate the economy with the adjustment of interest rates. Justin is getting shadow banned, apparently. And that's not a surprise. To be honest with you, I mean, if you're asking questions about R star, lower bound of zero, and all that other stuff, I would not be surprised that those are statements and questions that they don't want talked about. Because when I bring it up, I mean, the streams get devastated. Like they are not popular at all. You know? And to me, that's the most important information. Like what I shared on this whiteboard video or on this whiteboard just a few minutes ago on this video was probably some of the most important information that you can internalize. Literally nobody else is going to describe it that way. You know? And when I start talking about those things, it's like literally it kills the algorithm. Too much noticing. Are only my digs at deplorable and Kirk getting through? Yes. Like superficial comments will go right through, right? Like if it's not serious, if it's not real, if it's not, valuable, they'll get right through. But if it's something that's going to touch, if it's something that's going to hit it, if it's something that's compromising, we'll never stop noticing. All right, what time is it, guys? I'm hungry. I want to go eat. It is, God, what is it? Almost 9 o'clock? After 9? 9:19. All right. You guys are awesome, but 3-hour live stream, I think we've kind of covered the bases. Yeah. Um, it was fun doing that whiteboard video. I want to dial that in and make it a little bit better for you guys. But I think you guys get it. Like, to understand where it was, the Fed funds rate was in relation to the neutral interest rate and how the inflationary scenario actually made the accommodations take place. That's pretty profound, right? And like a lot of people aren't going to see it that way. All right, I got one more antenna to drop, then I'm done. All right, cool. I hope to see you guys at the webinar tomorrow morning. Not sure how I'm going to pull that one off. Like I said, I think I'm not sure if the fair has a good connection out there where it's at, but I'll figure it out one way or the other. So I hope everybody joins in on tomorrow's webinar. I'm sure the comments and the discussion is going to go quite deep in getting into some of the esoteric understandings of the Federal Reserve and their monetary policy in a direction and fashion that only the UE community really knows and understands. Of course, you can always pick up the pieces and follow along by looking at the UE community's classroom and getting the courses, looking at all the speeches and downloading the video course, getting a better understanding of how it is that the Federal Reserve is using those words and the expectations to deliver a monetary policy. Sounds like the family's just come home, so now's a good time to end it. Uneducated Economist, you guys let me know. Oh my goodness. Hi.